to. My name is Jesse Averu, and I'll be taking you through this quite historic day. Um, as we wait for Walter, I think he'll be joining us in a while. So I'll go over what I'm expecting today, given that we have a very momentous day. We have been served with a double whammy. That is, later on in the evening, we'll be expecting an event hosted by the Fed. So that is where we'll be getting statements on the Fed rate decision and other economic data or forecasts that will be read out and also explained by the Fed chair and other Fed members. Okay. Once again, thank you for showing up here. We are doing this each and every day, and so we have been overwhelmed by the reception that we're getting, and we hope that this continues further. So one of the key highlights, of course, will be the CPI prints, which are coming in the next few minutes. So I think those will be around 5 minutes or so. And this is one of the highlights that we begin to watch on today. One of the highlights, of course, will be the interest rate data or inflation data that is coming in through the CPI prints. And this is at 3:30 East African time. Later on at 9 p.m. East African time, we'll have a series of Fed events, as I stated, starting with the latest on the interinstitutional lending rates and statements thereon on the economic outlook in the eyes of Fed members. And then we will listen in following that as the Fed chair is grilled at 9:30 p.m. East African time. So traders should expect a volatile market today, depending on how the event plays out. So on the screen is, I think the data is coming out in a few minutes. So around 3 minutes or so. So we'll be keen to see what happens then. So among my expectations is that if we'll indeed have a lower print, that is CPI, that will mean the economy is cooling down, and therefore we might expect it will signal that things are slowing down, and therefore it will be detrimental for the currency that is the dollar. Hello, Zenith Pips. Welcome. I think I met you somewhere, and thank you for tuning in. So again, if CPI comes out hotter, then this will be good for the currency, meaning that related commodities such as gold might see the downside today. So again, we're just waiting patiently to see what happens in the coming minutes. So the kind of reaction, of course, will depend on the level of divergence from the expected value, and the market is generally expecting 3.4. That is for the CPI print, and therefore any kind of divergence from this will surely move the markets in either direction. So as we await this data, I think it's in 2 minutes or so. After this, we'll take a deep dive into the happenings of the financial markets. Again, it's a very momentous day, and that is why we started the stream a little bit earlier, and that is why Walter has not yet joined, but I think he's about to do that. Happy trading. I don't know if you trade the news, but I definitely am not taking any positions right now. Tell us what you're anticipating, comments, reply to the tweets, and we will see how the data shapes up in just a few seconds. We have less than a minute to that, so I guess it's dead silence till we get to that point. But generally, expectations, if we get a hotter print, of course, expect movements in the dollar, and therefore related items such as currencies, commodities such as gold, silver, all this will have some kind of major reaction. So let's just sit in and see what the data provides for us. Moment of silence for the accounts that are going to be blown. Well, we'll just wait and see what happens. And here we go. And we have it. Oh, that's a lower than expected print. So let's just switch to the market, see what has. Gold is buying, meaning it's bad news for the dollar. As I had said earlier, a lower than expected print means that economy is cooling and therefore it's detrimental for the dollar. That is why you can see this kind of reaction on dollar pairs. So gold, let's just check the lower time frame to see what is really happening. Yeah, as expected, we are buying on gold. Oh, this is very nice for yesterday's position. If you were here yesterday, you noticed that I had a long position on gold. So maybe, yeah, that's good for it. We just sit on our hands, see what happens. Maybe we can make some few trades after all this has cooled down. So in the moment, I'm just sitting on my hands, not doing anything, just waiting to see what happens in the charts today. It's very clear from the CPI print that things are going to be hotten up because, yeah, the economy is slowing down, and therefore this increases the chances that we get a rate cut. If not this year, maybe next year, but with the continued slowdown in the economy, therefore, the dollar might be very heavy. Therefore, commodities such as gold are expected to be buying. Same goes for the stock market. For those of you who are interested in the US 30, US 100, or the Nasdaq, the possibility of a rate cut increases or is good for such assets. And therefore, we'll be keenly watching what the Fed decides to do later on today, how they respond to the data that we are seeing today, and maybe hint to us how they're going to take the rate cut narrative going forward. So again, I hope you've not blown your account. I hope no one is blowing their account today. But yeah, it's just if you are holding positions on gold, maybe, and other dollar pairs, maybe you're on the positive side of the market today. And hopefully, let me just check how my position is sharing. Not bad. I had shared this yesterday. Let me just try to share what I'm looking at. As my MT5, my MT4 fires up, I just want to look at other pairs and how they're faring. This is on gold, 15 minutes. We are seeing green as expected, meaning dollar has been much affected. Look at that drop in the Dixie. I think we had a resistance point at the 105 area, and that has not been broken. Instead, we're heading downwards toward 103. If you zoom out on the daily, then I think like the 103 area, that area, the 103 area, and therefore I'm expecting that other currencies such as Euro USD has had some effect to the opposite of the dollar. You remember that USD has been selling since the political qualms in Europe, and now uh, uh, looking at US card. I think we had that resistance point yesterday, closing with a hammer. Therefore, people are expecting this kind of sell, but depending on the dollar, and since the dollar is generally trading lower today, is why we are seeing such kind of a drop in the US card. Other currencies, reactions are still the same. The Aussie dollar again is trading higher today. I think it's the highest gain today with a percentage overall. But key to this is that we're approaching a significant area, but that does not matter because today the dollar is quite heavy, and therefore this is why you're seeing such kind of reaction in the market. The buying pressure is coming in, but again, sitting on my hands, not doing anything. Anything, any setup coming way. So for now, I think I'll just continue to watch. It was initially at 23.75. So I think that is just to, for utmost good faith. What are your back? Oh, not yet. But I think he will be here with us in a short while.
I am
So,
back.
oh, good, good, good. So this is what the position I had yesterday, still running, and yeah, I think news came out. Have you seen that? News came out red for the dollar.
Oh, I've not seen that.
It came out a bit lower than expected, although not by a big
Okay.
chunk. So expected was 3.4. We have a 3.3 print.
Okay.
Just
So that means inflation is cooling off.
yeah, economy as expected. The cooling continues. We have been seeing this just from last Friday. Good jobs numbers, cooling economy. I think we are headed for increased
Ah,
probability of a rate hike,
cuts.
depending on what the sentiment we get today. I don't know what the Fed sees of this, but yeah, we're expecting that increased chances of the debate on rate cuts coming in. What do you think about it?
Definitely. That's a very good signal
Yeah.
for a rate cut. Actually, uh, though it has not moved that much, it's only by 10 basis points. That's too little. 0.1%.
Yeah, yeah. So I think
Okay. The target was two.
the target is two
But
percent. Yeah,
I really don't think that we'll wait until inflation drops to two so that we can see cuts. Because what is happening right now, the market is actually ignoring whatever inflation is doing, the inflation numbers, and just going with everything is okay. But on the other side, I think DXY is reacting to that news, and I think if we see a pause, I think we'll see a strong dollar, and yeah, that's how it will go. Definitely for CPI, it's telling it's red for the dollar because high chances that we will be seeing the conversation of rate cuts will be coming back on board. But as per now, as per what I saw on the CME tool, the expectation is still 90. I think the consensus is I think 97.8% of guys think we will hold rates. So uh, maybe this might change because of the CPI. Maybe because of the CPA, some things might change, but not yet.
Okay, I think we have. I think, as you talked about, there's two risks. One, the first risk is because it comes as a result of if the Fed wants to cut rates and it does so too early, and the second one is it will happen when they cut. They are too late to cut rates. So if they cut rates too soon, this will of course uh, it will result in some kind of inflation. And also, when they cut too late, we might be headed for recession because they will have kept the rates too high for too long. So I think they also have to navigate that possibility that they might be cutting too soon, and also they have to navigate the risk that they will have overstayed their welcome. I mean, the high rates will have overstayed their welcome. So I think they are facing those two critical decisions, and we will see what sentiments they give us today. Either will they be hawkish because the current environment favors a hawkish sentiment, but I think we'll be finding out soon enough this evening and how they are looking at this.
Okay. So, what do you think the stock market will behave because of this news?
Uh,
Jesse, are you there?
I expect, yes, I am there. I hope
Jesse,
I'm audible.
right now you are. Previously, you're not audible. You're just going back. Anyway, like I said before, I think we've seen from the past. From the past, I think for the past like 3 months, uh, we've been having pauses. I think since the fourth quarter last year, and in recent times, I think guys are ignoring whatever is happening on the red card side. So yeah, that's what is happening right now. Uh, I think I should share my charts, my charts here. Um, to see what to show you guys what I'm expecting. Uh, so here are my charts. Uh, Jesse is having connection problems. I don't know what is happening on his end, but okay. I'm very excited by the way today because I think most of the setups were being completed yesterday, and all thanks to Apple. Apple, I think. Nvidia gave sub to Apple to prop the stock market kidogo. So I'm very excited for what is coming next, and I think I can show you what I'm expecting. And I will start. I will start with definitely as you can see my watch list. I've done a whole revamp of my watch list, and top of the table I have Google, and Google is setting up well. You can see before market, I had already marked out where price is likely to go, and hopefully it will go there. And I'm very bullish in the entire stock for the entire stock market, and you can clearly see a triangle. So you can see you can clearly see a triangle, which means if we successfully break here, break the counter trend line, I'm looking to go up to 185. So pre-market definitely it's trading above the counter trend line, but we just a few. I think just a dollar, less than a dollar above the pre-market price right now, so that we can blow the all-time high. So same story to Microsoft. Microsoft has the same story where, as you can see, there's an ascending triangle where pre-market is actually trading at an high, which is very exciting. And I was telling Jesse earlier that I'm ready to play to press play. So when for that it reaches, I think I'll just go silent and uh, and hey, and enter my position. So this is what I'm expecting. I'm expecting something very bullish from the breakout, and I'll be looking for 70. That's around 35, more than 35 plus 35 plus dollars per share. So my next ticker is Netflix. Netflix has a very good triangle, which I think I've been talking about it for the past. I think since Monday, I've been talking about Netflix, and it really it confirmed the point D, and it is setting up well towards the breakout. Pre-market shows that it is very near to breakout. Actually, who knows? In a few minutes, it might be trading above the counter trend line. Yeah, I'll be loading up that one PR. So next is Nvidia. Nvidia on the intraday, we have a very good triangle, a very good consolidation. Actually, pre-market is already trading above the counter trend line, and hopefully we will get a fill at 122 level. This level 122 at the breakout point. So I hope right to my position. I don't want to. I won't place a market execution, but I'll uh, I'll put in a buy limit. So hopefully I'll get filled at 122. Looking for 127. So that's a cool $5 per share. So uh, the last one, the last one is Meta, and I mean Qualcomm. And Qualcomm, definitely, we've been talking about this chart since Monday, since we started the stream actually. And as you can see, the triangle is still on. Uh, Sorry, my don't know what's happening. We're back. So uh, I'm hoping for a breakout. Actually, pre-market has already broken out, and I think my breakout point is 209.6, 209.6, and I'm looking for 222.8. So that gives a cool around $12 per share. So that's very promising. This is what made me very excited. If you're following on my Twitter yesterday, I have 5 tickers ready to play. I think where I tipped I dipped my toe to test the waters yesterday. I mean, I'm already in on Google. Google, I think it was actually what I did. It was I fat fingered. Why? When I was there's a difference from HFM. The same problem I called out yesterday, that if you're analyzing on if you're conducting your analysis on TradingView, kindly check whatever you are. Make sure you check whatever your broker is offering. Are the prices at par? So unfortunately for me, I placed a 172.4, hoping hoping okay, I placed a 177.7, and it was lagging. Actually, my HFM is lagging by 1.5. So that's a different chart. It happens all around. You can, for effects, it's easy to notice, but for shares, kidogo, it might go unnoticed. But it gave me an early entry. But looking at how the chart behaved, because I realized way later towards the close, so I just decided to let it breathe and let it go. So this is my discount. Actually, I'll be having a discount, and good for me. Pre-market is already above above my entry. So back to yesterday. Yesterday I really messed up. Not really like messing up, but it was so unfortunate for me. I had tight stops all over. So I'll go to Meta. I had two trades on Meta, and both of them, actually, I got stopped out in both of them. So why? Because of tight stops. And later I found out, like, we later not after being stopped out, we create there was a creation of an order block opportunity. So this is what stopped me out, and so I had an entry here and I had an entry here. So and I had placed my stop around here. So I was wicked out. As you can see, these are. Let me just show you. It happens. This is normal. So right now, since I just started trading my account this week, I think I'm down 2.5%. That's manageable. And two on Meta, the 2% is from Meta, and then I had a trade. If you can remember yesterday, I had a trade on Nasdaq. Same thing happened to Nasdaq. I got stopped out, as you can see. Actually, the good thing this happened, it stopped me out because I had a very tight stop, and that's why I tell you. That's why I favor. That's why I favor 1:2. Yes, you can see from my end why I favor 1:2. RR.
Yes. Oh yes.
What you can see why I
Yes.
favor 1:2 RR, especially when I'm using patterns. This is why, because
I see that.
price at times price can go deep, and if it goes deep, I don't want to come by. Instead of looking for, instead of looking for buys, entries around the imbalances, I prefer I prefer just buying at the breakout. And yesterday, I don't know if I'll say thanks to you, Jesse, but
Yes.
if I was alone,
Okay.
if I was alone, I
Yeah.
could be playing Apple off the breakout. And now chances are we
Uh,
are not. I will not be able to catch the breakout ever again.
yeah.
So
True.
I think that's on me. That's on
True.
me. That's on me. So I think that's on me. But I'm hoping we'll have a good dip, a good retest. Actually, pre-market is trading below. Pre-market is trading below the close last yesterday. So hopefully, fingers crossed, we'll go back to 200. But what are the chances? We wait and see. Anyway, back to you, Jesse. What's up on your end? I know I'm sorry I've gone straight to stocks. Kawaida yangu.
Okay. Yeah. Okay. No problem. I want to welcome someone. We have a guest today. I don't know if he's ready.
Oh yeah. We had a guest today. Actually, didn't tell you guys. We have a guest today. A profound trader. Yeah. Okay. Just has dropped, but today we're having a guest. I think I can change the tile format so that at least we can accommodate our guest. We'll introduce him shortly. Uh, yeah, that's much better. I think it's even much better than the other tile. So uh, we have a very good guest here, and let me not introduce him before Jesse comes back on, because yeye ndio amemwona. I had not seen him. I was glued on my charts. So yeah, Jesse is sharing his charts actually. Jesse, you're back.
Yes, I am. I hope I'm
Okay,
audible
you are
enough.
dropped for a minute. You are, and I've changed the chart layout, so don't mind me. It's better this way so that
Okay.
we can accommodate our guests.
Okay. Would you do the honors?
Please do, because you are the one who saw him first. So please do, kindly do.
Okay. Today, like I mentioned before, Clement. I don't want to say much. I will leave to say who he is and to say something about what is happening today. So, Clement, you can take over.
Nice.
Are you there,
I'm
Clement?
Desmond. Yeah.
Okay.
Yeah.
Okay.
Okay. So I'm Clement. Yeah. On Twitter, my account is Nato Unfiltered Forex with a double X. So yeah. Getting straight into today's events. The CPI this time has come out below estimates. And for those of you who have been following, this is the first time this year, the first time that the CPI is coming out below estimates. All other times imekuwa ikitokea above estimates, and it hasn't been very good. So yeah, and also today being an important day for the FOMC decision committee meeting and decision, it's also kind of, it's not, how can I say this, one data point doesn't make a trend. All right, it's good news, it's nice, but considering the trend over the past few months, like since January to where we are now, inflation has kind of been mostly flat. And for those who follow, in the various FOMC meetings and press conferences, the Fed and even Jerome has been saying there has been lack of further progress on inflation. So yeah, but this time there seems to be some level of progress. Yeah, and that's what's getting the market excited. As to whether this is going to affect today's decision, okay, that's okay. I don't want to say if it's a yes or a no, but it's more to the no side, because what the Fed is looking at is the trend of these inflation numbers. So currently, now this is the last thing I will say. The what do you call it? The summary of economic projections. That's a s- that's another project, like a document of projections done by the Fed of where they're projecting the economy to be in the next few years. So what the market is waiting for is to see that summary of economic projections and to see where the Fed is projecting rate cuts this year. All right. And the previous two, I think it was on January and March. No, I'm not so sure about the March. Okay, the previous two SEPs, the the projection was three rate cuts this year. All right. So, but currently the market is expecting the Fed to take a step back and only project two cuts this year. Um, yeah, I don't know if if you guys have ever seen it. You're going to, it's in the Fed website usually, the Federal Reserve website, where there's the meeting calendars and information stuff. Yeah, it's there. So that's it for me. That time, when that time comes, I believe local time it's going to be around 9:30. Yeah. Um, that summary of economic projections is really what's going to determine the market direction in the short term predictable future until probably next month when we get another CPI. All right, so yeah, and thank you for having me, Walter. It's good to be here, and I'll be coming. Nitakuwa nakuja sasa. Yeah.
Okay, thank you. That's our guest, our first guest. I think we deserve a clap, kidogo.
Yeah. I have a
Anyway,
question for I have a question for Clement.
okay, go on. Before I say hi to some our friends here on YouTube,
Okay.
the guys who are streaming from YouTube.
Okay.
Anyway,
Okay. So,
go on.
so Clement, the CME tool predicts that we might be having a rate cut by September, or a singular rate cut this year. Are you part of that group of people who think that we are likely to see a rate cut this year, if any?
Okay. Economically speaking, it's not it's not possible. I don't think it's possible. But from a political point of view, they may deliver one cut. Not deliver one cut because inflation has come down. No, they may deliver one cut to kinda loosen the tightening a bit, because the GDP numbers came in. I think it was around 1.2, 1.3%, which is quite low, below trend growth, and the employment numbers are starting to picking up. The unemployment numbers, you saw the unemployment rate at 4%. So in terms of whether a rate cut is going to be justified by September, I would say it won't come from the inflation side, all right? It's going to come from another side. That's the side of it being used, the rate cut being used to kind of give the sense that the Fed is going to cut more, and the Fed probably they're going to do it and say we're doing it because we believe inflation will come down in due time. But for now, we decide to cut because the unemployment numbers aren't looking too good. That's it.
Okay, I think I'm in agreement with Mr. Unfiltered here because I think when it gets too political, I think you saw was it a memo or a note which I think Jesse you are even wondering, is this true? How true is this? Where I can't remember, is it Elizabeth Warren who's trying to tell the Fed to cut rates? Jesse.
Oh yes,
Okay,
yes, I saw that also, and I think
I think it
somewhere.
was a letter. It was a letter to Fed, and exactly that's the pressure from the political side. So, will you see a cut? Who knows? But the pressure is the pressure is coming up, and
Okay, here is it.
here we have
I think okay.
Kidogo. Before you go on, I think I see Slim Shady saying nice way to go on Twitter. So big up. Yeah. Okay. Go on.
I
Go
think
on. Just
there are several things to consider. Yeah, there are several things to consider. Number one, this has happened time and time again where the Fed chair has been quoted saying that they're looking into the data, they continue looking at the data, and that will inform how they will deal with the rates. So for me, it comes down to, do we see the cooling taking place? Do we see the cooling going forward? Do we see the July print coming in lower? Do we see August coming in lower? It's also good to remember that in August, he will hold this, I think.
we just dropped off.
Oh, looks like I dropped Kidogo. Am I back?
Yeah, you're back. Come again.
Okay. So,
In August?
yeah, in August, he'll be attending this economic symposium. And this is where I think will be key for everyone to watch. I think that is where we'll get a hint to whether, August will be around the year end. So when he attends this economic symposium and he's, grilled for some time, this will be some kind really get to see if we indeed we get a hint as to whether the Fed will cut rates indeed or not. But for whatever the market is feeling right now, with all this cooling pressure, with all the good jobs numbers coming out like we saw last Friday, today we have a lower CPI print. And the economy is kind of slowing down, activity is slowing down, and this just increases the possibility that we get the rate cuts. And for me, I think I talked about it a little bit yesterday. For me, my positioning will be to ride on this rumor. The rumor that there will be rate cuts is what is most important to me. Not even the rate cuts per se, because the rate cuts will mean that the economy is already down at that point that they have to cut rates. But what the market is anticipating, the rumor itself is what I'll be riding on, because the rumor is what investors like to price in. They like to ride that rumor that, we might be cutting rates in September, we might be cutting rates 2 years in 2024, early 2025, we might be getting a rate cut. That is what I like to see. If the market is expressing its views and it's showing us that they're expecting a rate cut, at least one rate cut this year, then that is what I would like to take my position on. And we need less to say, I'll be long.
Oh, you've just dropped again.
Oh my God, I think my internet is misbehaving.
Misbehaving.
Tell me when I'm back.
Okay, you were saying you're back actually. You're
I think
saying
I'm back,
needless
yeah.
to say. Yeah, you are.
Okay.
You are.
Needless to say, I'll be continuing having a bullish outlook on gold. I'll also be having a bullish outlook on the stock market and some few names which I think are very strong in the stock market. But we wait for August. I think August is what will really show us whether we're getting a rate cut this year or not. But in the meantime, I will continue monitoring for the sentiments. And if the sentiments in the market are really pointing out towards a rate cut, I like the rumor and I will buy the rumor on the commodities I just mentioned. Back to you.
Okay, I think it's time to task our guest, and from yes, you are at Traders KE. We used to hold spaces, and he's a very good fundamental analyst. And there's one thing Clement does, and Clement knows how to marry the fundamentals and the technicals. So I want Clement to try and I don't know how prepared he is, but I want to request Clement to try to kindly share his chart and explain to us the movement of key. I don't. I was almost to call them tickers, but key assets and how they have moved in reaction to the CPI data. So. Kindly, if you don't mind, Clement, you can just prepare yourself and share your charts. Uh, Other than that, yes. While Clement is preparing, I think what Jess is saying it's true. I think most of the guys will buy the rumor before before any before the actual cuts come to get in. Where like before the Fed just start cutting rates, which I don't think it will be anytime soon. But before the US elections, I think we might see a kidogo aka small cut. I think for me, I think 25 bps or 50. So, and it can go lower to 0.1. So we don't know. Anyway, I don't know if I go back to my charts, but nimeona, I think Fauz is saying gold Jew. So before I go on, Jesse,
Yes. Yep.
since we started streaming on Monday, I've not heard you talk about oil at all. That's unlike you. I don't think I've ever gone. We've never talked for more than a day without you mentioning oil. So kindly, we want to see what oil is doing. I think
Okay.
you have
Okay.
you, you have a better analysis of oil as compared to me. So
Oh, the reason I'm not talking about it is this. I was waiting for after this massive sell. Let me just point it out. So after this, that arrow is the other way around. So after this massive sell that we saw from around 80s coming down to 2. Now, our expected lower prices, lower oil prices, the understones that is really influencing CPI components such as sales, manufacturing, and all that, because we have currently low energy prices for industries that are heavily dependent on oil. So we saw this huge sell-off up to 72. And then I was waiting for oil quite around the previous support 77. So for me, that level has been broken. This is where I was waiting for oil. As this commodity right here, right there. That is why I was waiting for me to take a short position. But that did not happen. This candle came, broke the resistance, closed above it. And for that reason, I was out of the sales. And I'm also in the moment kind of looking for buys. But for buys to come in, I will have to see the level of 80.57 being broken. If that happens, then I show myself in a short-term buy. That is up to 81. I think I'll just illustrate that for everyone to see. So if you get to this position, break it. And obviously, I'll wait for the confirmation. I'll have my stops around whatever low we'll have at the time. And then I can look for a short-term buy up to 82. But in the current environment, I'm also expecting lower energy prices. And for that reason, I'm still alive to the fact that we might sell off, but not today. So that is why I've not been talking about it, because my entry was invalidated, and at the moment I'm just waiting for it. Yeah. I'm just waiting for us to get out of all this mess. It's a messy area right here, very messy, and therefore I'm not taking entries at the moment. Yeah, continue.
Okay, I want you to show me something. I think something I've just noted from where I am. Kindly,
Yeah.
can you to the right there, reduce kidogo hapo. What
Okay.
if price decides to fall from where it is right now?
Okay.
That's a very good reversal. And from my end, definitely I'll give it a name. That's a very good head and shoulder from where price sits right
Oh,
now. Can you see
I
it?
see. I see what you're
You see?
seeing. I see what
So
you're seeing. So
don't dismiss that shot. Definitely,
okay,
if I were you, I, will- I will look to go short after it breaks the neckline down there. But
this is what you're looking at.
around, yes, it goes up
That is
then goes down. So
yes,
if it breaks that neckline, I think that's a pretty good head and shoulder, where I
yes,
think a chunk full of a swing downwards. So
yes.
that's very nice. uh,
So you know, what,
interesting.
Walter? If you come
Yeah,
here
sure.
and don't, if you come here and don't break 79 or 80s, yeah. If you don't break the
Yeah,
80s, if we remain below 80, then my sell will also I'll be also be looking for short positions on the same. But depending on if we go above it and close above, then I think I'll be very careful not to take any short position. But once if you come to the 80s region and reject it convincingly, then I might be considering taking that short at this level, at the 80 level instead of the 77 level. But again, that will depend on the price action that will be the order of the day on the particular time that I see that rejection. But anyway, I see the head and shoulder. And where do you take your entries? Break of the
uh,
neckline?
yes, definitely break of the neckline. But
Okay.
uh, what we say right now, as it is, price is still in structure, so we don't know. It doesn't have to complete the setup. So price might surprise us. Something can happen, and the price might blow off that. You see that resistance point that you've
Yes,
highlighted there in green.
yes, yes,
You don't know what will happen. We can have geopolitical tensions, and then it blows off the roof. We can see gold is going up and up. So it can
yes.
react with the
I'm
with
also
the, with
looking
the
at
with the rest of the commodities. And
yes.
who knows? It is not fixed that it will be a head and shoulder, but comes to completion, if it makes a very good shoulder, a right shoulder there, and breaks that low, definitely we'll see price rolling over. So we'll see blood in the streets. So yeah, that's a
Very
very
true.
good. Yeah, yeah. So
So
uh,
that is all I've been commenting on oil. What do you have on your end as gold continues to go for the skies? I'm literally just
on my
waiting.
end, I thought Clement would have been ready by now, but I think he's silent. I think I'll reach out to him. So let me just share my chart and then look at gold. We want to
Okay.
see what gold is doing, well, what is making for whose tick on this
Okay.
other side.
Okay.
Oh, gold is up 1% today. So definitely, if you're an intraday trader hapo unakula vizuri. You still your positions are still running. Jesse, I thought you had positions in gold.
Closing it
Okay.
at the current resistance.
What's your TP? Your TP is up there, the 2380s.
Yeah, not completely. My TP is at 2350. So I don't want to ride
Oh,
it all
so
the way.
you're
So I'll just
okay. You keep taking partials, but thing is, we can see gold going up. Do you have a reason behind this? What's your reason behind this, or this
yes,
is
I think
CPI? Is this
this is CPI
it has reacted to the
naturally, but yeah, it is CPI naturally, but obviously we're seeing a weak dollar, a heavy dollar, so that means good for commodities such as gold. But on the other note, I think the moment we didn't break 2287 or so, this is a very good indication that the buyers are still in, that a large chunk of investment of money is in gold, and therefore we might be continuing the bullish run that we had already established. But we are dealing with prices that we have not seen before on this commodity, and therefore the moment that we held that 22.87 was a very good indication that that level can hold, and we might be bouncing back up towards the upside, and maybe make it. But for the moment, I think I have it intraday. But depending on what happens today, I might look for adding on to the position once the current one is closed, or just adjusting my TP. But I don't think I'll do that. I'll just look for a new position in gold.
Okay, here I'm back in the painting class.
Okay.
We are back in nursery here, and I'm drawing some trend lines here, and it looks like we have a channel. We have a
Okay.
channel. Some might confuse it with a flag, but if you're looking for gold to go anywhere, you want gold to come bounce off or break out here. So if I were you, yes, take casuals, but you can leave a runner, a risk-free runner, to try and test this trend line here.
Yeah, I was
So
already risk.
there's a possibility to
I was
start.
already risk-free by yesterday. I closed some and left it.
Oh yeah,
Remember that?
yeah. I remember you mentioning that. Clement, are you here?
Yeah, Nico.
Tuambie kuhusu gold.
Okay, so first, I am expecting a lot of maybe. I'm not bearish in the long term, but just in the short term, because what I was saying is
Okay.
there's a retrace after you see it was on Friday. Yeah, Friday's sell off. When last week on Friday the sell off, and then now what the price action from Monday to where we are now prior to the CPI. To me, that was looking more like a retracement, not exactly a reversal. A retracement, and then CPI, ignoring the CPI now, probably when the FOMC decision comes, and then the Fed kind of say they're projecting only one rate cut down from three. You see, that's going to be mostly very strong for the dollar. And talking about gold, it's not going to look very good on gold here in the short term. So that's when at around 9 p.m. or 10 p.m. maybe, I'm expecting something of a sell-off if the Fed does what I am expecting them to do. But currently, it broke out to the upside, as you can see, and yeah, now nangojea tu kuona where price is going to be by the time the Fed is coming to do their thing. Yeah. So
Okay, I want to pose a question to both of you. Kindly let me just interject, because we're just talking about one thing, and today is CPI day. Today is it's Fed Watch. It's Fed's day. So I want you guys to discuss a statement by Rufus. Rufus says CPI is a new NFP. Discuss. We can start with you, Clement, because I've cut you short. Kindly.
yeah, see, I don't know what he meant in that context, but for me personally, I would say, yeah, the tide changed quite, I think, last year or the year prior to, because back in 2020, was it 2020 or 2021? Yeah, there, the NFP was the most important news release, right? It was the most important because the employment numbers during the COVID time, employment numbers were extreme, numbers that have never been seen. The monthly changes were extreme. So at that time, the NFP was the peak, the most important release. And then, of course, even during the recovery, the job growth, how strong they were, the NFP was the thing, right? Even the Fed, they were deciding they delayed on the rate hikes because they saw how strong the labor market was, and it was good news at the time. Until now, inflation started stealing the limelight. It peaked at 9.1%, I think, yeah, 9.1%. And then now, at that time, the Fed was already hiking. And then, yeah, kind of now, even the Fed says they are not considering the labor market. Like, their focus is on inflation only. The only time they are deciding to consider the labor market is if they see an unexpected weakening. So, yeah, the CPI currently, that's where the limelight is. That is the most important data point, even not just for the US, but even for the whole world, because it's what's determining what the Fed will do. And what the Fed will do is what's determining how strong or how weak the dollar is going to be. Yeah, that's it from me.
Okay, Jesse, what do you have to say?
I mean, what do I say? Clement has said it all. First of all, I think I'm audible, right? So first of
Yeah, you
all,
are. Yeah.
I think Rufus is referring to the fact that we are moving away from concentrating on the debate, or the debate is moving away from other areas such as focus on employment to the focus on interest rates. Right now, the theme of every article written, or the theme of every discussion is what is the Fed going to do. So this is because number one, you know that for rate cuts to come, the Fed is carefully assessing the CPI prints. But I think for me, I think they have said this before, that PCE is what the components of the PCE is really what they are really, really looking at. And for me, I think that whatever Rufa said just refers to whatever Clement just talked about. We moving away the debate from the jobs numbers and the current emotions. The emotions in the market, we react to every inflation print that we get from here henceforth, because we are at a critical level. Like I mentioned before, the Fed is assessing whether to cut, whether it will be cutting too early or cutting too late. Therefore, I think the narrative right now is what is the inflation print, and how is that going to rally up the markets for that matter. So that was the context of, I think, what Rufus was trying to imply. Very well put by
Oh,
Clement, by the way. That was very nice. Yeah.
okay. Kindly don't allow me to take you back to an economics class, but you remember the objectives. I think I've said this before. We have like the, any central bank has like four objectives: price stability, that's inflation, what we are handling right now, and uh, f- full employment, NFP, what we use to job numbers. The other one is economic growth and balance of payments. Balance of payments means the trade between the intercountry trades. So what is happening after the money supply injection, which happened during COVID? I think before COVID and before that injection of that money supply, the economy was glued on economic growth, and the conflicting objectives of these monetary policies kuna kuwaga na mbili each and every time the governor is trying to control two things, ama I'll say that committee. And right now we are trying to balance the price stability and the full employment, the NFP. But is it really the NFP when uh, when we see interest rates affecting the economic growth? So that's why I think the NFP is being sidelined kidogo, and we're concentrating on CPI, the inflation numbers, and who is in the middle? Who is trying to what is the tool which is being used to try and control this? Definitely the interest rate. So uh, don't mind me. The time umeona nimezima screen kidogo. I had rushed to take my economics notebook. So don't mind me. I was looking. Actually, it's there. It's always here with me. So so well, okay. What happens? Uh, what happens, there's another thing we're not talking about at all, and it's the balance of payment. And the balance of payment, rarely do these big countries get affected by the excess exports. Yeah, I mean excess imports, because their exports as well ziko juu. So in Kenya we might be looking at that sana, like right now when we are trying to increase the taxes and trying to control that inflation from that side. But in a country like the US, we the shift is between, are we stabilizing price to see the economic growth? Are we stabilizing uh, employment to see the economic growth? So that's why I think we are moving from the NFP, and the concentration shifts back to is slowly okay. We shifted from employment numbers. Now we're concentrating on the CPI. If CPI goes below 2%, we will be here, and trust me, we will be talking about two things. We'll be talking about the NFP. It will be the most anticipated the news, and the other thing, the economic growth. That was what was happening before COVID. Everybody was glued on the GDP and the employment numbers. So I think we should. I think we have like 5 minutes before the bell, and I want to go back to my stocks. So Clement, I think you also double on stocks. I think so. I've seen you comment on some stocks, not that much, but I see you have a good interaction with the stock market. Kindly tell us what are you watching? What are the current tickers you're watching, and what do you think about the stock market in general? Before the bell comes in, we have like 4 minutes.
Oh,
Clement.
nice. So personally, I do focus on the stock markets. In fact, the Nasdaq and the US 30, those are the indices I trade. The other things I trade are only euro and gold. So about the stock markets, as you know, currently we are at all-time highs. So I prefer to stay out of the market when the market is making all-time highs. I prefer to be a spectator rather than an active participant. Like you saw, I think Apple's event, was it yesterday or the day before? I can't remember
It
well.
was the day before.
Or
I
the
think.
day before.
Yeah,
Yeah, it was
yeah,
on Monday.
and on Monday, and you saw what Apple did. Yeah, they
Yeah.
I don't even know what these guys were doing, but the stock reacted in a good way. The news was taken well, but really, in terms of the products they introduced, it's not going to save them. None of the things they did is going to save their sales in any countries. I don't think. Introducing a calculator on iPad and then bringing in Android features from 10 years ago. Now that's when they're integrating them into Apple devices. It's really, I don't think it turned out to be kind of good for the stock. But in terms of sales and the long term outlook, how the revenues are going to look, I think they will need to do more because, yeah, remember the
Um,
story about China. Yeah, and I almost forgot. See, they are partnering with OpenAI to
yeah.
do this AI thing and AI assistant stuff, and that's really not going to be good. Okay, it might turn out good, but currently I don't think it's going to be good for them because I don't know if you saw Elon Musk. He kind of tweeted and said they're not going to be allowing Apple devices in Tesla factories and SpaceX. They're not going to be allowing Apple devices in because of they are with OpenAI and they were already taking a lot of data, stealing a lot of data from their customers, and now they have OpenAI also stealing data from their customers, which OpenAI is owned by Microsoft. So it's a what do you call it? it poses a great risk of a data breach, and yeah, I, I don't, I wouldn't, I'm not trying to say Apple is a bad stock, but I'm not so confident in how it's going to perform going forward. Yeah,
Okay.
that's it.
That's your case. I am really ready to counter it, but I think we are less than 1 minute to the bell. So kindly, like I told you, Jesse, you have to take over this time because I really want to make these entries because I think I have like 5 entries to make. Definitely, if you're watching, definitely the risk is calculated. So don't mind me. The bell is here. Jesse, kindly take over. Jesse?
Yeah. I think I'm here. I just I think this guy
Uh,
is very huge on it. I think when he comes back, we'll taking him up on. Sorry,
I'm hearing. I can hear you
we,
guys.
we
So
should take him up.
msinisengenye.
This
That's
is
a
the
Mag
Sengenye. I'm
7.
just
What
saying
you
what
guys are
you
talking?
stand for. So when it comes, yes, we must grill you on why Apple is so bullish. But again, I think if the stock market up there breaking all highs and Apple is also breaking all-time highs, this is part of the Meg 7, and therefore I think in your quest to sell us on the Apple buy, right? Okay.
Yeah, sure.
What I'm looking at, I want Clement to comment a little about the Euro USD. I think, do you trade the Euro USD?
Yeah, I do. I do.
Yeah, we've seen a sell-off earlier this week, and right now, because obviously of the heavy dollar, we are seeing a resurgence in the pair. So, what do you make of it? Are we seeing something short term, and then we continue with the long sell, or are we holding? Are we continuing with a kind of a buy?
Okay, so about the euro, I can't exactly say if it's what, but currently for me, I think it's more bearish than it is bullish, right? Like uh, with the thing, the eurozone is already cutting interest rates, and even when the Fed starts cutting, it's of course going to mean the dollar is weakening, so the euro.
Uh, uh, excuse Clement, you have some issues on your end. I think audio wise, kindly check on
Yeah,
that. Kindly.
I think you're lagging a bit.
Now, now is it okay?
Yeah, you're good.
So I
You're
think
good.
Clement commenting that the euro is. Oh yeah, you're okay now. Clement, you can just go on.
Oh, nice. So about the euro, um, it's kind of mostly fluctuating. There are these huge sell-offs and then huge impulses to the upside, but mostly I think it's mostly bearish. And yeah, once the Fed comes and says they're going to delay their rate cuts a bit further than expected, um, yeah, I think that's going to mean the euro is generally going to trend weaker for some time. Yeah. Um, the euro, unfortunately, I can't have that long-term outlook with it because things are ever changing on both economies. There are things changing in the eurozone, and there are things changing in the US side. So it fluctuates a lot. There is no that consistent, clear trend. So yeah, I prefer to approach it from an intraday, weekly perspective. Like this week, I'm expecting it to go long. This week, I'm expecting it to short. But currently, this week is yeah. Currently, we're up, but I don't think it's going to stay like this for a while. Yeah, we might see probably last week's high revisited, but then I expect retracement at that point. Yeah. So yeah, for that one, it's kind of 50-50 for me. Yeah. Thank you.
All right. Thanks for that. But yeah, so in short term, because of what we have to buy today currently, but long term, USD will also be heavy, and therefore I think we'll be continuing the sell off. I think I have the same sentiment, given that the ECB is already was first, I think, to cut rates, was followed by Bank of Canada, in the same spirit, cut their rates. Now we are waiting for what the Fed does today. So I think, yeah, valid opinion. In my honest estimation, I think the euro dollar does in the future. Meanwhile, on side stock market is open. I think Malta is quickly making its trades.
Yeah, as you
So
can see,
just a quick one. Gold seems to be yes. I think gold is making a pullback, given that we have seen a break of 22, 23, 20 local resistance. Now we're making some kind of pullback, and I guess we are already, how many minutes are this? I think we're already an hour into, and this is where ideally I'll be looking for any chance that we make entries on gold, albeit not a huge one, because again, today on the USD, I'll be very cautious about tomorrow. But again, tomorrow you also have PCE, PPI numbers coming in. So again, I'm kind of reluctant to get into a very subset trade on XAU, but that will depend on whether I see a structure that is of my liking. If I do that, then I'll be taking it. But if not, I'll just be trying my hand at small position, given that gold is not pulling back. If it pulls back towards 23, 24 or so, and forms a nice structure above resistance, above local resistance, which is not turning into support, then I can think of making my move in the market. But for now, sitting on my hands, because again, I said very volatile times ahead of us with tonight's events. Yeah, so yeah, just sitting down and watching what is happening. Meanwhile, in the stocks area, I think we are having some kind of muted response. Apple again is up a percentage up against yesterday. I think we're about 1.3% up, and it's still moving like a rocket, this regime of new highs. So again, it's very interesting to see that. Meanwhile, also the Nasdaq is also moving quite as open. I think almost a percentage up. Big dog in the area, which is Nvidia, is already up 2% up. I think I exposed, I showed you guys my Reddit position yesterday. Today again, opening up 2%, mirroring the kind of gains we're seeing in Nvidia. So maybe that is an indication that it's quite a strong stock for all it's worth. Again, many stocks talk about Tesla is also up after tanking heavily yesterday. I think we saw around 3% tanking yesterday by Tesla, but today is opened higher, I think at 1.4. So maybe investors are coming back into the name, trying to show that they're quite strong on the matter. And therefore, yeah, those are some of the highlights. Again, the crypto is the muted response yesterday. So this is a good indication. I think we are almost nearing the highs. We had 69,000. After that, after that tanking of the inflation rates, meaning the dollar was quite heavy, quite weak today. And therefore, that such kind of a move in Bitcoin was expected. Now, currently, we are playing around with the local resistance, which is at 69,000 or so, or 300 or so. Yeah, so yeah, those are some of the highlights after market open. Silver is up 2%. Nasdaq, as I mentioned, is up a percentage, and I think this might be taking us higher. Again, this just adds to the narrative that the story about interest, about rate cuts is coming back. And it's coming back with a huge impact. This is why I think Rufus was also commenting that CPI is a new NFP, because looking at the reactions that we have today, this is clearly people trying to say that they expect a cooling economy, a slowdown in the economy, and therefore the Fed is really watching the dot plot to see where they place their economic projections in the coming period. So a season why we are seeing a cooling economy again puts that narrative of a rate cut very high in everyone's mind. And I guess this is what investors are trying to tell us today, or the markets are trying to tell us today. So I don't know, Walter, what's happening on your end?
I'm back. I'm back. I'm back, and
Right.
it's green everywhere. It's green everywhere here, as you can see. I think only in my entire watch list, we can just only see two red tickers. One is JP Morgan, and the other one is GameStop. Before I go on about the bullishness in the market, yesterday something very funny happened. I mentioned there will be a not really an earnings, but a report from the GME, from the GameStop. They were reporting, and they were floating some other shares, and they were bought, all of them actually. They closed at par. It was something very surprising after the rolling Kitty thing, and I think Kitty should be a board member, and hey, he should be reaping benefits from the company. But that's something very astonishing, and it closed 22
For
22%
Walter,
up. So yeah, come
Walter,
again.
on the same,
Yeah,
I think this
yeah,
dilution that was announced by Game was very intentional. No, they did this on Friday, last Friday, just before the
yeah,
Roaring Kitty was scheduled to go live. I think it was very
yeah.
intentional for them because a share dilution means that, if there is some buying pressure coming from all these gimmicks online by the Roaring Kitty, then we are likely to see that whatever shares they will have floated will find buyers at the time. So I think it was very
Yeah.
timed, it was very intentional for them. And I guess that is what we are seeing currently. So kindly go on.
Okay, that's it for GameStop. I don't think I'm not very interested with the ticker, but hey, if you can remember, we had drawn a counter trend line, so I'm expecting price to go up there with if we can see volume of buyers getting very interested in the stock after what happened yesterday. I think we have a bullish narrative from what happened yesterday. So I want to tell you guys that I'm still in my Google trade from yesterday. I think towards the close, it's performing well, as you can see. The next one, which at least I got to buy, is Microsoft, and as you can see, I'm already filled in, and higher we go. I hope we are this an all-time high, so I expect it to shoot more. From the setup, actually, I think I've told it before how I estimate how I estimate my opportunities. And if you don't mind me reminding you guys, I measure the trough from the trough low to the trough high. We measure the volume of the water ile inaweza toshea hapo ndani anyway. And yeah, from Jesse sema.
Nico, that was not me talking.
Okay.
You see me.
Okay, maybe it's Clement, but anyway, that's how I measure my opportunity, and that's why I'm saying I'm expecting a 470, and then we go to Netflix. I think Netflix iko games. It has games. I think it has broken out, and it is trying to go back in. It is going back in, but still playing around my open. So it's flirting with my open, and hopefully before the 1 minute we'll see a sizable bullish candle, which which hopefully will shoot up to kidogo wait will shoot up to 681. So if I have to measure from inside, the way I usually do, estimating my opportunity from there to there, from the breakout to around 680s. So that's a good one. Hopefully, we will stay above. I hope price will keep trading above the counter trend line. Next, we have Nvidia. Nvidia flew without me. In, I didn't get a fill. I've placed a limit order, but it's almost halfway. So these are one of the stocks. If you get a chance to buy it's the close. You just I don't think I'll be getting filled or at the 122 level, but look at it fly, watch it fly. It's flying, and I think it will go to 127. So my next stock, I think it's Qualcomm. Qualcomm, I might get filled on Qualcomm. Uh, yes, it opened above the counter trend line, which we've been waiting for it to break since Monday. You remember here we tried it tried to break and then it dropped. Yesterday it did the same. It tried to break, then it dropped, and now we have a break, but without us. So I'm still waiting for price to go back down, at least to retest the trend line. Then we shoot back up to 222.8.82. And if you want me to show you how I came up with that, uh, here's how I came up with that. And that's how it was looking. And I think I had to 222s, if you can see from here. So if you remember, I think yesterday I posted, you wake up in the morning, buy Google and Microsoft. It's not financial advice, definitely. On a later note, but what I'm seeing on my end. So what we were waiting for, the entry we were waiting for, we were waiting for an entry on Netflix and Nvidia. At least we have an entry on Nvidia, and I mean we have an entry on Netflix, but. Unfortunately, we don't have we were not we were not able to be filled on Nvidia and Qualcomm. So you go with what naenda na chenye imejipea. If the market gives you goodies, you go with what is being offered. So back to you, Jesse or Clement, whoever is ready.
Just
Jesse?
I'm just sitting here thinking I should have belonged on open, given that with the heavy dollar, we're expecting that this will be very nice for the stock market. So I don't know why I did not collect when during open, but with that in mind, I think I am looking for opportunities. Number one, gold. I was setting up an order on gold. Just touched the area I was talking about. Touched 324 on its. It just rejected that area, and so that is an area.
You've dropped kidogo.
Very
So
interested in
kindly,
going. I don't know
you've
if I
dropped
can
kidogo.
do that as quickly as I can.
Would you mind sharing your chart, please? Jesse? Jesse, I think Jesse has dropped off. That is network issues. Clement, from where you seated, can you spot any opportunities in the market right now?
Not really. Nona Gold has kind of erased some of those gains brought by this.
Okay.
So that's what I'm watching right now. I'll wait by the time the FOMC event is coming and see if there will be any opportunities within that hour prior to the event.
Okay. If you don't mind, okay, I think as per as per our earlier request, I think we were requesting you to show your screen, but I think next time we will be prepared better. But yeah, as you have heard, I think gold has erased some of its gains, the earlier gains from CPI. So yeah, I think analysis yako ilikuwa sawa. You are short term, and if you don't mind me, I want to no, I would like I'd like Clement to kindly comment on the DXY. How is the DXY from your end? We can see a huge dive right now.
Yeah. The dive, I don't want to say it's temporary, but it's common for days of this FOMC events. If the price is usually the day usually closes with a massive week. So I don't know if you can check on the other day. You can see Wednesday, 1st May. I think it was 1st May. If you can take the crosshair
As
hapo
the
hivyo.
first
A
May.
daily chat. 1st May, Wednesday.
Yeah,
Yeah.
first May.
Mm,
There we go. There we go. Yeah.
I think
Let me
yeah, that was.
highlight it in another way.
Mhm.
There. I think everybody can see that. Yeah. There you have first May there. The week we can see up there. Continue.
Yeah,
Continue. Continue, Clement.
there's a tendency of price to be at a critical support or a critical resistance by the time that
Yeah.
FOMC event is coming. So for this time, you can see the dollar is already falling. I don't know if we have already made the high of the month or not yet, but we're going to see where price will be by the time Jerome is coming to say his things. That's yeah, it's probably going to determine where price will go. Yeah, but currently I would say it's more of a buy than it's a sell. It's more of a buy than it's a sell in the short term
For
because
DXY.
yeah,
Okay, yeah, exactly. Even for the from the fundamental point of view, I think it. I agree with you. It's a buy. It's a buy. It's a buy. But we can see a lot of flashing. We can see blood in the streets. So hopefully, not hopefully, FOMC. This is Powell's work. I think we might see a reversal from here. So let's wait. Let's wait. I think we will be having a space later after the numbers print. So I think we'll talk about that later. What is happening? Definitely, DXY causes a ripple on the majors, and as you can see, the dollar is losing everywhere. That's Euro USD. You can see the same on the pound. The AUC is seriously working DXY. We can see the same on Chef. Chef, okay, I call it Chef, but it's not Chef. It's the Swiss franc definitely. On the card, the same is happening, and I think on the yen pair too. The yen is getting stronger as compared, but if I squeeze it down, you can see some consolidation since the last intervention. I think we have a very good we have a very good squeeze here, but you know how the delivery in the FX market is. I cannot play with ease in this market. In this market conditions. So I want to go back to see how my stocks are faring. Definitely, I have stocks on, and definitely I'm in jitters, but I think we're doing good. I can see Netflix has already crossed the one. Netflix has already closed the 1% mark, and that was my stock which was giving me jitters. But definitely, Google is performing okay. Okay, but we can see a huge retracement. I think it's better if we can look at it from the 15 minutes time frame. I think we can see trying to chew. If I remember what the book I first read it, they were calling this chewing the tail. So we can see price trying to chew the tail back up. So if possible, we can chew the entire tail. Going Softy is doing good. You can see Softy is definitely doing very good, and all-time high. And it's fun. It's fun being all-time high and having a setup at least to show you where price is going. So this is not from me, and I think not very many, but I don't know about your strategies. But I think some strategies capitalize on the blocks, on the price blocks and whatnot. But as from my case, I'm sorry, a consolidation is enough to tell you where price is going, and you can estimate how far it can go. And I've showed you how I can estimate how far it can go. And yeah, we're expecting for 70. Netflix, msema kweli, yes, we're doing good. I think we have a HOD, a high of the day, and yeah, let's keep going. I don't think I'll ever get filled. I'll be filled on Nvidia, and the same applies to the hopes for getting filled on Qualcomm. Is it's seriously going down, but this is what is happening, and it is exciting. So, okay, I've talked about whatever plays I had, but we don't know what is happening to the other markets. So I want to go to Meta. Meta is seriously after gapping up. We had a gap up at the open, and if you can see where the gap up was from, let me read the price of at open. The price at open was 113. I mean 513.77. So you can imagine, after printing that gap up, it is seriously coming back down. So remember yesterday, the what I expected for price, I had drawn this continuation. I mean the counter trend line, and here we had, and from my estimation, we were going to those highs. I don't know if we successfully completed the I mean, yes, we were going for 511, and we went to 513, and after 513 we can see consolidation. It works. Yes, it works different, but it works for me. So there it goes. Uh, I think you can go on to the other setups. We can go to Apple. Apple is seriously mooning, and if you are lucky enough to catch this entry yesterday before the close, from the order block which was printed here, the minor. I'll call it a minor SR. You will call it a order block, a minor order block. Potato. So if you're lucky enough, I'm sorry, if you're lucky enough to catch that, and I can see the move towards 220 is working, and it will hit 220, and hopefully it will consolidate to give us a good opportunity later. So why 220? If you are not here yesterday, let me repeat why 220. It's 220 because on the larger time frame, we had a good consolidation of what we call a flag. Yes, a flag. You've heard right, a flag. And from an estimation of the trough, from the trough low to the trough high, we can see price. We can see an opportunity for price to push higher after it breaks. After it broke, actually, because it already broke. After it broke the resistance up there, which was a near long resistance. Since the 2023 July, I think, the 2023 July high, let me just confirm. Yes, after 2023 July 17th high, and it repeated the same December, and look at it, price is mooning, and sometimes I know you can be against the stock, fundamental wise, but najionea how it is, especially you, Clement and Jesse. You are against Apple fundamentally, but it means some investors saw the stock as very lucrative. It's a Mag 7, for heaven's sake. A Mag 7, it means it can print high, and people are interested. People will buy, and AI, for me, it was good news. I don't know why you're looking at it as bad news, but let's talk about Amazon. This is happening on Amazon. We saw a consolidation. It has almost the same setup with this is another Mag 7. Mag 7 is Magnificent 7. It has almost the same setup as Microsoft, as Apple, and it made the last high back in April, and we have another high. We had another high last month, back in May, earlier May, and it looks price is seriously approaching the resistance point, the resistance high. I think the 2 month long resistance high, and if we see a break, who will we not to go long? And this is Tesla. Tesla is doing its thing. I think it's up for the day, but I don't want to talk a lot about Tesla because of the tomorrow's conference, and what the shareholders and the stakeholders might say, because because of the Elon Musk package. But will they pay him? If they will, uh, will is Tesla strong enough to to be able to see? Oh, is it sustainable enough to pay him? What's your opinion? I don't know. And if they don't pay him, are they willing to have a management change? Well, huko ni kugumu, but we can see a reversal. We can see a reversal, a clear reversal here. I want to show you with some curves here. Uh, this one shoulder. Hii nitafanya mpaka mtaboeka because this is the way I trade. This is how I trade, and I find solace na the setups and the patterns, and that's another shoulder. So if we can break this neckline, I think we can go higher, for fuller, for longer. Yeah, back. It's just a here.
Yes, I am.
Yeah, kindly help me out before I talk about my entire watch list. Let me stop at Tesla, and then I'll come back and talk about the what do we call them? I'll talk about the banks, the financial institutions. Take over. Kindly, if you don't mind, you can share your screen.
Oh, that's one. You can just show my chart. I think it's already shared up there. Just show that because I want to comment on
Okay,
something.
not
But
from
before
my
that,
end.
okay, number one, I am not against Apple fundamentally. Like I said before, Apple is breaking all-time highs. Apple is breaking all-time highs.
Uh-huh.
So again, fundamentally, that makes sense. Number two, I am just a broke guy
Why?
hating on Apple
If
users,
you,
right? So because I cannot afford Apple products.
yeah,
Because I can't see some.
oh,
I can't. I mean,
that's your angle.
I can't see some of the emojis. I can't see. I can't see the emojis these
Oh,
guys
touche.
send. What's that about? Do you want to divide the world based on these tiny things called emojis? Yeah, just on a very light note. So that is it for Apple. I don't hate Apple, guys. I don't
Wow.
have the money to buy all
Okay,
these
before
products.
before
Guys.
before you go on,
Yes.
Clement, are you in the same boat with this guy about the emojis and everything? I think that's a very ish argument when it comes to the charts. Clement, what do you have to say about that? Is Clement here with us? Okay,
Yeah, I'm
uh,
here.
have you heard the comment? The why Jesse is against Apple? Have you heard that comment?
Yeah,
Because it's just are you siding with him on that?
no,
Because
he's
you
not.
can see the emojis. That cannot hold water when it comes
So
to
Clement looks
investing.
like an Apple person. Clement, are you an Apple person? Clement, are you an Apple
Oh,
person,
Clement,
or are you on this side of
or
mine
an
where
Android.
I have to look for emoji? Yes.
I am an Android person. Eh? I use an Android phone, and when it comes to investing, I have ever invested in Apple, but I cannot say I am confident with the direction they are headed because they were already banned in China. Chinese government said no one here should be using an Apple phone because of the privacy issue. And them partnering with OpenAI, I think we're going to see more of similar incidences. So yeah, that's what I think. Apple in general, however bad or good their products are, people seem to like them, and yeah, that's it.
Okay, Jesse, go on. Yeah.
Okay, so first of all, I also like to leave politics to politicians, but on China banning the Apple products, I think this is more of an issue of these guys have their own WhatsApp. These guys have their own. They like to localize all their products. So I guess Apple users in the China might be in the millions. These guys are so popular, and Apple going there is going to take some very huge chunk of the revenue, which could have otherwise, stayed. So I guess there's more to, they might ride on the privacy thing. which is very ironic because the US is also riding on the privacy thing from China. So I guess I think there is something that is cooking in that deal. So anyway, no, so the chart I just pulled up 1,000. Just look, sorry, the 2,000. Now it's very interesting to me, and I think we had this conversation before. The small caps have been burdened by the bulk of interest rates, in that the borrowing for their operations is quite high, and therefore the performance has been subdued in the recent past. So just looking at the chart, we have been confined to a bearish channel that is on the daily chart. And Walter, I pulled this because we might be coming to form something that you like. This is, I think, is looking at it to just see what it is. You like this kind of pattern.
That's
The Russell
a
looks
triangle.
very interesting at this level. Not a cup and handle some
That's
point
a triangle.
form. Anyway, we'll discuss.
Okay,
we'll discuss about that.
The handle
later.
is too deep.
Oh, the handle is too deep. So this is what you're seeing. And nitakusumbua hadi I get the gist of
Yes, you will.
this pattern.
That low, then you go to the
That is
high.
what you're looking at as of now. Yeah.
Yeah.
Yes.
Very nice. That's it.
That's what you're looking at. All right.
Yeah.
So for me,
sure.
I'm looking at the trend. Then obviously the narrative of lowering rates sometime in the future plays out very well for the Russell. And that I'm trying to imagine that if the Nasdaq has seen such a meteoric rise, and we also seen the commodities such as gold and the same, but it's been just subdued for the Russell. And if we're seeing this regime of low rates coming in, I think the Russell has a very good chance of bouncing. It's been fairly resilient in these hard times for small caps. We saw this rise from April, just from the levels of this support level at 19,909. We came up here to 2,125. Then we descended upon this current channel, the daily channel. Quite bearish until today, where we have seen such a big bounce in the market. Of course, basing on the on the expectations that rates might be coming down sometime soon. I guess it will be very interesting for us to happen. Actually get a cooling economy in where the rates are contained, for that matter. So I'll be watching out for the Russell to see what happens. I've never taken quite a position on this. I think this year round I might get a very good chance to go along the Russell once the rates are contained, for that matter. So looking elsewhere, your beloved Apple again is almost 4%. It's morning, and I guess you must be very happy. Did you take the trade, by the way? I'm a pre-market.
It flew without me. It flew without me, and the fact that it is halfway my opportunity estimate. I can't play that. And I want to comment about the Russell. The Russell, the small caps. I really don't mess around with small caps. So yes, I can see they are breaking out, but can you see how their price action is choppy? If you don't have a good entry on the small caps, it will come bite you. So I don't want to give you jitters on what is what, but you get my point. So you were talking about Apple as much as it's halfway above my halfway towards TP, and it has flown without me. I just canceled my orders, so that's what I've just done. Cancelled that, and I think I'll be canceling. I'll be also canceling my Nvidia trade. My pending position on Nvidia. I think I'll just close it down, and if the market decides to range from here, I think I'll just look for another consolidation on this end. But what can I say? What can I say? What can I say? The same thing to the same thing on Qualcomm. I want to share my chart. That's why I'm stammering here. So this also is happening on Qualcomm, but Qualcomm is not yet halfway my opportunity, but it looks super bullish, and I don't think there'll be a chance that I'll be filled in my position. So let me just see it fly. So I'll be canceling the Nvidia trade and look for manual entry position if possible, and also the Qualcomm. So I'll just wait. Uh, Other than that, I want to dive into other markets. Okay, I think we need to explain to guys why we concentrate so much on stock. The stock market, yes, it is we are too much on the stock market side as compared to other assets, and why why the stock market is because we have over 500 stocks at our disposals. So it means opportunities all over. And we have very different fundamentals to talk about. If we decided to do this, if we just decided to do a live stream daily on FX, we might we might be doing it for only an hour. Why should I say so? Why do I say so? Because we know what moves the FX is the central banks, and we have a handful of central banks. And the handful of central banks, I mean DXY. If you just talk about DXY, it means you've just talked about the majors na umemaliza hapo. So you can imagine, we talk about the DXY, we talk about the majors, and you don't have anything to say after, let's say, 30 minutes. We can talk about the commodities. We can just talk about gold, silver, and we can talk about gold, silver, and what we call oil, because those are the major tickers, and those are the major commodities. Not that we cannot talk about anything else, but it's we can talk about this. We can always talk about the stock market because it's broader, and because it's something guys are not used to doing, and we want to educate guys on why we play the stock market and how we do it, and we don't only have to do FX. The stock market is there; it's on your brokers. So please tune in, muone vile I do my thing, and you can learn a thing or two, and who knows, you can be trading the stock market. Anyway, is Clement here? Clement, are you here? Clement, Jesse, who do I have here on
Yeah,
board?
I'm here. I'm
Yeah.
here.
Yeah,
Okay.
I'm still here.
Do you Okay, I have a question for Clement. Do you trade tickers like individual stocks, or you just hold them for a while, or you just decide to play the indices as a whole? But do you play individual stocks?
Okay, so the thing is, um, from an intraday bias, like what you're doing now, you're trying to get an entry and an exit within a week. I tried
Yeah.
that for stocks, but stocks are very volatile, and it didn't work in my favor. All right, so what works in my favor is having that long-term outlook on a particular stock. For example, um, a company like, well, what's this one? Supermicro. You remember
Yeah, yeah,
Supermicro? Yeah,
yeah, sure.
Supermicro. Um, the time from the time they were raising their earnings guidance by almost, I can't remember how much. They almost double, I think. During that time, that's when I saw see this stock is kind of going to do well alongside Nvidia, one of these companies that are selling the shovels in this AI gold rush. So you invest in that company for the next few months, you get. But on an intraday perspective, mimi niliona moto
and I decided to not do that. So what I do intraday is the indices.
Yeah.
Now the indices, those are the ones I trade intraday. Yeah, that's it.
Okay, I want to explain a little on that because definitely I know the others might have tried. And the stock market, you said it is volatile, but I think the FX market is super volatile as compared. Intraday, as long as you're not going below 15 minutes, it's not that volatile. Okay, that's one. The second thing about that is volatility, and there's something else called momentum. The momentum is very relatable to somebody who doesn't want to see the market go to one direction aggressively, or the volatility, or during volatility you just being surprised by massive candles moving towards one direction, and the other time it has just changed direction, like what we've just seen on gold since the CPI print. That's one of the advantages playing the stock market. So I want to encourage you, Clement, if you'd like, you can try again. So feel free to try again later on your own terms. But nimekupea what my view na nimeanswer your question. So I think Jesse, you were saying something. Let's hear from you. Ndio tusione kama umepotea. Are you here?
Yeah, I'm just looking at I'm looking at the Nasdaq, and it's just flying. It's not giving me any chance to get in. We had one chance, and this came at.
You are late. Oh, actually, I was to comment.
I think
about
at 4:30. Yeah. Okay.
I had something to comment about that.
Go on.
If you're trading the index, if you're trading the index, and you have some tickers, the way you remember when I was trading the US 30, and I had each and every the 30 stocks for US 30, I had a watch list for them. You remember? That was back last year when you are. I think there was if guys don't know, Mr. Jesse here has been my trading buddy for a while. So we used to share a lot with him. So we also share a lot right now. And I think that watch list helps me to know what the overall market is doing from both sides. I can look at the future, the indices, and I know what is happening on the other stocks, and I can look at the stocks and know what is happening on the indices. So I think the early entry, you could have utilized that opportunity if you had a chance to look at how individual stocks are playing around pre-market. And pre-market was very bullish, and you could have utilized the chance to get an early entry. So that's what I'm trying to say. Like during this, before actually the CPI, you could have ungeona kulikuwa na dalili za it will be very bullish from the other side. The individual stocks. So that's I think nimekupea kasiri kidogo. So next time we can capitalize on that. Jesse, back to you.
Yeah, true. That's a fact. But today I was waiting for something. Today was very volatile. Now, say we had a higher or a hot inflation, what will have happened?
I told you
Obviously,
about that.
with the hot inflation.
I told you something.
Uh-huh.
Let me give you my bias kidogo on stocks. What has happened, and what we have, something which we have witnessed since the pause started, after the hikes. Now we tukaingia kwa the era ya pauses, and since the pauses and the recent past, hapa tumeona after the pause, and we are expecting a pause by the CME data, the CME tool. We expect a pause, and the stock market ignores the CPI and almost ignores. Yes, it will be volatile kidogo kwa FOMC, but generally ignore the CPI and how it will play around, na we will the inaendelea kukuwa very strong market. I think we've seen tumeona the market slumping kidogo back in April if I'm not wrong, but it is not because of the inflation, it is not even because of the FOMC, the interest rates, I mean. So that is my take on that. So I think the stock market is moving differently as compared to the other markets. So that is my case. That's why I'm very confident. I know it's CPI day, I know it's FOMC day, and right now I have 4 entries, two on Google, one on Netflix, and one on Microsoft. I can hold them past CPI, past FOMC, and sitashtuka. So that's why. But if it was currency or if it was FX or gold, my God, hata sidhani ningekuwa kwa markets this week. So that's why I'm doing that. You get my point, Jesse?
Now I get it. Clear enough for me. That's why we are here to share ideas. That's why I like.
Yeah, sure. That's
just
why we're
relying
here.
on. True. So anyway, in other news, Nvidia, the beloved, is up almost 5%. Do we see 5%? Do we see 6% with it?
Wow,
immediately?
it's 4.4.
Could be in the afternoon. In the afternoon, not Kenyan afternoon, but the US afternoon. I think to us it will be an evening already. So again, Reddit again is almost 4%. Again, I'm really liking how Reddit is moving. I think we are breaking levels, and we might be looking at creating new prices for the stock. And then Apple is already up almost 4%. So it's everything green today. So against this is the day that we see a market which is quite of strong. It's already 1.5% up today. Everything green on my side of the stocks. Microsoft is up almost a percentage. The only downside to this is Meta. I think Meta is really weak today. I don't even know why Meta is so weak today, but I think it's because we're dealing with a critical level or critical resistance level. Tesla is
Okay,
up.
can you please share your screen? There's no movement on the screen. Kindly share.
Okay. I think it's inashtuka kidogo. Inashtuka kwa nini?
Hey, I've just noticed.
Does not want to.
Continue, kindly.
Yeah, so I'm saying that everything is up, everything is green except Meta. I don't have a reason why Meta is so low. Maybe I look for it.
Look for Meta.
It's weak. I think one of the metrics that is quite weak today. Maybe I'll look for an explanation as to why that is happening. But everything is green today. Everything is moving, and maybe today is the day that the Nasdaq finally sees that 3% that. Because we need to see some resurgence in the market, take out the all-time highs and see what happens after that. But for the meantime, I think we are well on the path to that, depending on what happens later on today. But as things currently stand, we are here. We are going to see, a break of current price levels or current resistance levels, for that matter. So again, do you see Nvidia making the 6% that we've seen on other days, or is this a day that we just play around with 3%, 4%, 5%, but nothing extraordinary? But with the way things are looking up, I think it's a huge play today. It's a play that should be on my books. I don't know why it wasn't on my books. But again, the question that I was expressing before, but you have dismissed the fear or whatever reservations I had about trading the market today. But I guess this is one of the reasons why I should. I'm really trying to settle on making my entries early enough, or my orders early enough, so that I take advantage of the big moves that I anticipate, such as today. I think the big move I was anticipating was the Apple move. I think I said that yesterday, with Apple breaking, the market also breaking. and a heavy dollar and all that, it's easy for me to say that I was expecting Apple to go green today. Meta was one of the names I was watching. I think yesterday I made that clear enough, and I got into a position. Just a small one, which turned out just fine. I was not able to get into Tesla yesterday. I was waiting for a rebound after the huge sell-off, and then I can take it to the day's lows. But I was not in a position to take that position. So again, but it turned out okay. It turned out we still bounced to the daily lows after a small bounce in the stock, and then later on in the evening, just went up to the VWAP area. But that will have been a very nice sell. So again, I think I should be working on getting my entries early enough so that I can take advantage of some of these going
Okay.
forward.
I want to, before you go on, I want you to go on, but let me comment something about NVIDIA. I don't know why you're being surprised about that. What happens when the stock gets too much value, and it becomes very expensive for the ordinary investor. So that's why we have a split, and after a split, I remember in class we used to say it's a split discount. So a split is a discount. It is like a discount for the guys who don't have enough, who couldn't afford to buy a share of Nvidia at the $1,200 plus. So right now the stock is as cheap as 120s. Actually, right now is 126, so it becomes affordable to very many guys. So when it becomes affordable to guys, it means it is also affordable to the wealthy. And after a squeeze, after if we see a squeeze, let me share my chart just for a moment, then you coming back and talk more about what you can see, what is around view up from your end. But after such a squeeze, it there is opportunity for price to, after that short squeeze, it means there's an opportunity for price to spring back up. And right now we are experiencing a fresh all-time high. And this is why, it's because the share is too, it's too affordable, and it's affordable for everybody. If you didn't catch the bull run last time, you have another opportunity. Yes, we've missed our first opportunity after the split, but you see, we were trying to do that. But it's a what I'm trying to insist on, it's a split discount. And very nice. I like this. I can't wait for the next consolidation. If I have to look for a metric to be buying before it breaks out at point D, if I can be, if I can find the SMC guys to show me how to buy on order blocks from the mnifunze. So you teach me how to get these bargains, and instead of waiting for a breakout, I buy at this uncharted water Zuku. So just back to you. Oh, Jesse has just dropped. Anyway, I can just continue. Or Clement, did you have any comment about the markets in general? What is happening from your end? I know you're moving to unaenda through many tickers, as you can see, as we're doing the same here. So Clement, are you there?
Yeah, I'm here.
So
Huh?
what are you looking at on your end? Because me, in a day, I think I go over around 100 plus charts trying to look for opportunities, but see 100, more than 50, let's say.
Oh, nice.
On your end?
Miss Angaliangi mingi. Okay,
Go
yeah.
ahead.
Talking about Nvidia now, I think unlike Apple, I know I said Apple, I don't think it's a very good time to buy, but for Nvidia, it's still a very good time to buy. Very good in the sense the stock split increased the supply of the stock, and yeah, made the stock more available to willing investors, and that's definitely going to absorb some of the demand that was there. The demand that was there at when it was $1,000, now being 120, it's and more shares being available, people are going to get in. Yeah, we're going to see it. I can't say I have a price target for it, but this is a stock that will definitely do well in the long term. Yeah.
Okay, unlike you, I have a price target, but only on the short term. Uh, Fortunately, my setup inanisaidiaga kupata price estimates from inside my setups. So as you can see, when you are talking, I was trying to estimate where we're going, and where we are going, we are going to 127s. So 127s here. So I think we are less than $1 to there to that number. So very exciting. I had mentioned I want to talk about JP Morgan. JP Morgan, there was a sell off yesterday. We saw a sell off in the banking stocks, JP Morgan and GS. I think JP Morgan is the one which is doing worse than yesterday. I think GS, the Goldman Sachs, is doing better today. And doing better, doing worse. How this is doing worse? And I don't know if I have not seen any news on the stock on the in regards to the banking sector, but how I see it very easily. And when interest rates are going high, there are two reactions expected in the banking sector. One, it means they definitely, if you're depositing, that's a liability to them, and for them to convert a liability to an asset, they have to loan out. So if they are loaning out at a higher interest rate, it means they are getting more, but they are loaning out kidogo. So it means that's a tightening in some way, and maybe their bond book, they were suffering on their bond book. So what is happening? The CPI has gone up, and there's a likelihood that the interest rates will be going down. And if the interest rates will be going down, it means loans will be expensive. Loans will be much cheaper, so their loan book will be expanding, hopefully. And for deposits, for the deposits will be going down, because people don't want to give the money to the banks if they won't get a higher if they won't get a higher interest from their money they are entrusting it to the banks. So one thing, the inflation numbers imetoka lower, it means the discussion of cuts is coming. And if the discussion of cuts is coming, inamaanisha definitely we'll be seeing an exodus from the bonds to the loan book. So is that really good? Is that really profitable for them? I think no, because we call bonds and the treasuries, the securities, as risk-free assets. What do I mean by risk-free assets? The chances of defaulting by the government is very low, but the chances of defaulting as a client, who's coming to look for a loan, is very high. So it doesn't look good for the banks. So I think that's the bearish perspective ile naangalia on JP Morgan. And I want to say the same for the Goldman Sachs, but the Goldman Sachs today, I think it is behaving quite different as compared to GS. Is actually very different as compared to JP Morgan. But I think I also have a theory on that, and the theory on that is because today, if you remember, on Monday there was a conference which was starting on the biotech conference. On the GS, sponsored by GS, I mean. And the top companies in the biotech sector, like Moderna, like Pfizer, the Eli Lilly, the great Eli Lilly, were attending the conference. And I think we might be seeing a bullish and an uptick because of that. So I don't know. I think I'll just go dig deeper and see why GS is doing exemplarily today as compared to JP Morgan. But I can also see Citibank is doing way good. So it might be a case of JP Morgan only. So let me go dive deep on dive deep on the banking sector. And Jesse is back. Kindly, Jesse, take over as I look for answers on why is JP
Walter for
Morgan
Walter
tanking?
for president. Walter for
What?
president.
Why are you saying that?
You're going for
Eh?
presidency in the next election. You should. Someone just said that you should run for president in the next election.
Eh, tena
Is
bwana,
that something we will?
siasa kando. Okay, I can be very political. I don't want to talk about that a lot. I don't. That's another side of me you guys don't want to see. But I can talk
Really?
about politics. We unijui vizuri
Really?
Jesse, nilikwambia unijui vizuri. Anyway, enough about that. Kindly take over as I dig deep and try to see what is happening in the financial sector, the banking stocks to be specific. Muongea hapo na Clement kidogo before I come back,
All right,
and
all
you
right.
can share your chat. Usisahau kushare your chat.
Just a moment before I do that. So gold, I think is as I share my screen, I think gold is retraced back to the level that I was looking at before. I had my orders at 23.19 point, no, 23.21. I think we are right there at my entry level. Again, a small chunk of a position at that position. I don't know. We just we're not going anywhere. We're not pushing up. We're just stagnating at at previous resistance and support. I think just everyone is just very cautious about what happens later on tonight. Yeah, so I think we'll just continue watching what happens there. Same case, Nasdaq is stagnating at 1.5. I think you're finding some kind of level here, and I think might be, maybe might be one of those days where we see 2% and then we retrace back down. But high chances are that we keep pushing. I think we might see 3% of the Nasdaq today, but again, I might be wrong, and we could just head south towards 19,400 or so. But again, we'll be watching this carefully to see what happens in the coming hours. Nvidia is up almost 5%. Reddit almost 4%. I'm really loving that because, as I said yesterday, I have a long position on the same, a long-term position on Reddit, and it's very interesting that we are seeing 64, the price of 64 right now, and meaning that the best is yet to come, and therefore we continue watching the same. And the currencies, euro dollar up almost a percentage. I think we had talked about the euro dollar before, and Clement was just saying that we might be looking at short-term buys, but in the long term, we are seeing a lot of red coming in. So again, that is another interesting pair that guys will be watching in the coming in the future. So again, not much on my end. Euro USD, as much as it is buying today, again still below the counter trend line. So therefore, yeah. So I guess our view on short-term buys and long-term sells is still valid. I don't know if I will take a position on Euro USD once we get to the top of the trend line or somewhere in the region. So maybe around this region. So maybe around that region right there. So maybe that is one of the things that I'll be looking out to see how we react at that level. If indeed we see some kind of selling indication, then it will be good for me to take a position, riding it down towards the bottom of the channel, which is at 1.05 or so. Again, depending on the conditions that we might be experiencing at that particular time. But again, this is one of the good opportunities that I have spotted in the market, and I'll be always looking out for Euro USD that top level at around 1.08 or 1.09 to see if I can catch on a selling position. Moving on, I was also very interested to look at what is happening to the US dollar, Canadian dollar. The Canadian dollar, I guess, yeah, this was what I was waiting for, because I saw these levels playing out where I had my counter trend line right there at this particular level, and we're seeing a sell-off after two hammer candles. I think I talked about this earlier. We saw two hammer candles rejecting that counter trend line, and therefore, with today's happenings, I guess the move was already anticipated. It was accelerated, and now we are back down here. Unluckily for me, I've not caught a trade on the same because it was always going to be very dependent on what happens to the US dollar today. Funny enough, we might be having CPI and FOMC today, but we have also had crude oil inventories coming in at 5:30. I guess that's already happened. I don't know. I have to refresh my events calendar to see what has happened today. Remember, this is an ongoing report on how much volume is present with the commercial institutions in terms of oil. So again, that was being released a few more minutes ago. So I'll go to check the news bladder to check out what happened there. So on top of this, I guess what we are currently waiting on, or whatever, what everyone else is looking at, is what will happen later on tonight. And I don't know. We might be repeating ourselves by saying this, but it's quite important for me. One of the indicators I look for again is the hawkishness that will be expressed or otherwise today, later on in the evening. And yeah, that is why I've been, I think for those who are here on Monday, Tuesday, expressed the same that today is not, this week will not be a large week for myself because I kind of want to, see things cool off, see where the future is headed. This is a very important day. We are hit by a double whammy. I don't know. It's very, and by the way, it's a very uncommon situation where we don't see such kind of days where it's very rare that we get such kind of days where we get inflation prints, and we get the Fed chair, addressing us on matters, the Fed rate, all on the same day. So it's quite significant and it's quite momentous today. That is why I've been sitting on my hands almost for the entire week, just waiting to see what really transpires today. So on top of that, I guess I want to offer my comments on what I'm expecting later on this evening, in case you have not followed, and I'll just point out towards some of the recurring theme that I've continued to see, and what I am expecting today. So okay, before today happened, we have been followed. We have been, the central banks of both the European side of the European Central Bank and also the Bank of Canada came before us and did their rate cuts by around 25 basis points. So this is the environment that we're trading on, and later on to this week again we'll have the BOJ also making decisions on the same. It's also a time where I'm expecting that the debate on rate cuts will be with us following today, henceforth. So this will be a very significant time for us to be seeing huge movements. Again, I'm expecting, I don't know, I might be alone in this, but I'm expecting a very bullish commodities, especially gold. I'm also expecting bullish, a bullish Nasdaq at the same. This is because we have had it time and time again. Chairman Powell pointing out that the possibility of rate cuts is hinged on sustained disinflation. Now, today we have just seen that kind of disinflation that this guy is talking about. The rate came out at 3.3 while the market was expecting a 3.4 print. So again, it might be a surprise that we are getting such a cooling effect so early, but the number does not diverge, from the expected of the 3.4 print. So again, it's some kind of disinflation, but again, it's not so pronounced. So this narrative, of we are going to wait for sustained disinflation to see if we're going to cut rates, seems to be resounding throughout the board to other Fed members. So not forgetting the PPI print that you are yet to see this week. And the expectation lean towards a decline in PPI month over month, and also core PPI month over month. So notably for this, I've been watching the services that is related to PPI. I've been watching the services sector, and it's been going up for some time to around where we have come to the pre-COVID levels for services sector. That is a constituent of the PPI. So again, it will be very interesting to see what happens tomorrow. I guess that has been one of the news or the events that have been low key. Not being guys are not focusing too much on the same, but it's going to be also better. So my general expectation is that the Fed wants to be sure that inflation is actually cooling down enough, and that this cooling, can in fact be sustained for them to even consider dropping in a rate cut somewhere, either this year or the next. But that is yet to have. So we have to remember that tonight, as much as Powell's speech will be scripted to some point, I will be very interested in the unscripted version of what he has to say. Remember, he has to be grilled for around 30 minutes after the release of the report, and therefore this is so you can expect some volatility to happen in the market. So I'll be very much interested in what that unscripted version of his presentation will be all about, because that is why you can really read between the lines, as he tries to explain himself. He's a lawyer, so he's very skilled at this. But I guess I'll be hawk-eyed on to see whether he'll be hawkish or the inverse of that. So obviously we're going to be expecting some sporadic price shifts as he talks throughout this grilling. And that is why I'm largely out of the market today. So I expect that Chair Powell will maintain his narrative that Fed members are waiting for fresh data prints that points towards the 2% target for them to be that is the 2% cost of borrowing, for them to be confident in throwing in a rate cut for us. So first of all, the strong jobs numbers that you saw last week definitely point towards the Fed towards the Fed favoring, the market or the economic activity is moving towards the intended direction of the intended movement or destination. So traders and investors will also be waiting for the August event I had pointed out earlier. Myself personally, I'll be waiting for that because it will be very closer to September, and given that we are waiting for fresh data prints, coming in next month we have a fresh print, then we get to August and see what happens. So this will be close to what everyone is expecting, the September rate cut. So depending on by August, I think that for me will be the most monumental event in the recent past, and therefore I'll be very much willing to see what happens. So that is what I'm expecting for tonight. I don't know what Walter you're expecting for tonight. Do we have any highlights that or key things that we like us to see or to be looking at for later on in the evening when Powell is on the podium?
I expect the same song.
Yeah, true.
Okay. Funny thing, the past two FOMCs, I prefer not even. I'm not always actually a normal FOMC. I'm always there, glued, waiting on Powell and listening to the remarks after the data print. But the last two meetings sijakuwa nikisikiza. Why? It's because it's the same song. So even if there is pressure from the political side, I think the same way, and he knows how to twist words to try and express the same thing. So I think one thing he will repeat the Fed is looking at is expecting to see inflation below 2%. That's the target. Hiyo lazima mtaambiwa, ikikosa I think mnitishe za cabbage. But another thing, I think employment will be atajitetea na employment, aseme the market still look the economy still looks resilient because employment numbers are not that bad. So That's another thing which will try and which will be he will talk about. So I'm not expecting much, and that's why. Okay, today I know I'll have to listen in because definitely we have a space around the same time. So labda something else changes, but I don't think there will be much change from the last FOMC. If you want to know what the last FOMC our guy said, you can just go on the Fed's page and on YouTube and just go look. Alisema nini? So I think he'll just say the same things with the change in months and all. Clement, what do you think Uncle will say? Uncle Paul.
Oh, nice. So about, yeah, I believe we have some common ground up with the past two Fed meetings. It's kind of been the same, and sometimes this is how it is. There's something though I think you missed in the previous Fed meeting, the previous FOMC meeting. They actually pivoted. They did a silent pivot because they changed the pace of balance sheet runoff. I'm not sure if you remember Kwazile Spaces Traders KE. I discussed that. Yeah, they did a silent pivot in that in their tightening, they are reducing the size of the balance sheet. They changed the pace, and now they are slowing down on that one. So now, what's different and what's very different in this meeting is the summary of economic projections. This is something we only get, is it 4 times a year? Let me check the calendar. I think it only comes 4 times a year. Yeah, on March, June, September, and December. Yeah, only 4 times a year, this summary of economic projections. And on March, it was unchanged. So this one, the market is expecting the Fed to change something, and not just change anything, change the number of rate cuts they are projecting to do this year. So, and then in terms of what Powell might say about it, these days it's I think I can share my screen. I can show you.
Yeah,
Let
sure.
me share it.
Do that.
Yeah, share. Yeah, you can see it.
Not really. Not yet from my end. Can you see it, Jesse?
I think we need to switch it on. I think I've just done that. Is it now visible?
Oh. I think on my end imehang kidogo, but I cannot see any. Oh, Clement's screen is shared. Oh, mjaweka
Yeah,
one.
just carry on, comment.
Carry on, carry on.
Oh,
Yeah, ndio hiyo naona imekuja. See, 2024 FOMC meeting, the ones with an asterisk cover, this CASTA. This is where the projection materials are, the summary of economic projections, and they only do this 4 times in a year: March, June, September, and December. So you can see from last year, 2023, December, that's when they released the summary of economic projections, and then coming to 2024, they released another one on March, and it was mostly unchanged. So if we can, let me do you this favor of taking you through which number you are supposed to be looking at. So let's zoom in. Nice. You can see here this row, federal funds rate. This is where now this is the number the market is looking at. 2024, 2025, 2026 longer run. So the 2024 column, this is where the thing is. This is the one number that the market is watching, and it's expected them to change it. You can see the December projection is here. Now in the new one, it will come federal funds rate, and then this now will be March projection, because now they're releasing it in June, and they will see what they were projecting in March and what they're projecting now. This number is the median. All right, the current rate is 5.255 and a quarter. Yeah, so the difference between that median, the current median, and this is around 5 basis points, which is divided into 25. It's 3 rate of 25 basis points each. So this is the number you'll need to be watching out for. If it comes at 5%, maybe, yeah, that's going to mean they are only seeing 5.1. Kitokea 5.1, that means they have cut back by 2 rate cuts. They're only projecting, but yeah, you will wait and see. This is the market is looking at. As you can see, there are other projections they make. Projection for the unemployment rates, projection for the PCE, and even the GDP. So another thing is rates, all right? So these we go two cuts, for example. Look at it, see, so the Fed is the unemployment rate to 4% for them to deliver to, yeah, and then now the market as we go and as we get these releases. You can remember currently the unemployment rate is at 4%, so that's good news. That means the Fed has kind of achieved. They have achieved the target, the kind of slowdown they wanted to see in the labor market, because you remember the average up. So yeah, the unemployment rate being at 4%, that's good. We'll wait to see if they're going, and yeah, if they do it. This remains to be the most important one. Of course, there is also the dot plot. I don't want to go too deep because in a is somewhere. I don't know if it's here or in the actual PDF, but there's a dot plot somewhere, because even that rate that they are projecting, it's each individual member voting where they want to see the rate at that time at the end of the year. It's not here. When you look at the PDF itself, you will see the dot plot. So anyway, we'll look at that. I think look at that after you met. Okay, yeah. But for now, that was it from me.
Okay, that's something very nice, and I think that's one of the whole essence of why we are doing this. Kidogo, I think I'm trying to share my screen, but if you guys can hear me, the essence of doing this is one. Trading is very visual. There's something I can see, but we can just talk about it on Twitter. We can talk about it via texting, via talking on spaces, but we don't have anything to see. And if anybody is learning, might not get that feel of the market. And that's why we are doing this. We looked for, we were looking for a way to share what we look at the market and how we look at it. And this is very nice, and some interpretations like this, the way Clement has just done, and that is very nice. And as you can see, also we have charts, and everybody's showing you guys how they do their thing, and the market has turned. And I want to show you how the market has turned. One, I am out of Netflix. I'm out of Netflix. Why? Because that was a huge dip, and we didn't have a good breakout. So I'm waiting for my for my connection. I think my broadband is okay. Bandwidth is okay, but we have a slowdown kidogo. That is normal. Don't know what's happening, but I'm out of Netflix. Can you guys hear me? Can
Yeah,
you hear
yeah, you are.
Jesse?
Yeah, you
So
are. You are.
as I wait for my chat to at least to load up, I'm out of Netflix. Why? Because that was a huge dip, but I see the price is coming back up. But my rule is one: when you start bleeding, what you do, you control the bleeding, but bleeding never stops. So I'll take my L, but the rest of my positions are green. So apart from, I think Google is trying to come back in, as you can see before my chat loads, but Google is trying to come back in, and it's okay. I'll still wait because it had a very good breakout as compared to Netflix. So that is normal. That's market conditions. You lose some, you gain some, and what we have right now is whatever we're gaining is more than whatever we're losing, and that's a plus for the market. So kudos. Jesse, what do you have in mind? I think my chat is imekata. Don't know what's happening. Let me try
Oh,
refresh.
right. Is mine up? You can just click on mine so that it shows up on the screen. I don't know if it's there.
Huh. I can't see anything on my end. Yeah, I'm
Oh,
trying to
me too.
refresh. This is normal. I think it will stabilize. We have to start somewhere, and we had to start. The
So
goal
any
was starting.
true, true. So
Continue,
on my
continue.
end,
Just
before my chat loads up, Meta has been tanking today. I guess we're at around 0.3 of a percentage down. And it's very interesting because we just came up, hit me up, and then we're sailing back. Right now, we are the days low, but I'm expecting some consolidation given the time that we have right now. I think things are trying to slow down for the moment, and then they get back up in the afternoon. So
yeah,
for Meta, I think yeah, some consolidation at the bottom. We'll see if it breaks the flat bottom, but for now, it's just holding that day's low, not moving anywhere. As the market shoots up points, market is shooting up 1 point, almost 1.5%. Uh, but Meta is just tanking. So I guess it's a very weak name today. And if this market wants to come back down and sell, I guess one of the names that I'll be shorting will be Meta. Yeah, Tesla is quite strong, still at 3.5%. We are finding some levels, but I guess this is expected because we just started off with a big boost, but now we're finding levels where the market is still consolidating, and therefore one of the strong stocks again, apart from Apple, is Tesla, and therefore if the market wants to rally today, maybe get to the 3% level, the 4% level. One of the big names that I'll be really looking at is Tesla and Apple for that matter. Later on, Nvidia is also a very strong name. We just came down. We are at around VWAP, though we have not touched VWAP, but we are around there. So again, one of a very strong name today, up 4%. And if the market also wants to go to 3%, 4%, I'll be willing to take a dip in some Nvidia longs, but that again will depend on. Right now, it's a very good level because talking about Nvidia, we're just holding 125.6.
are you sure?
Just
Excuse, Jesse.
sorry,
Jesse,
yeah,
do you have your chat on? Because I
I
can
have,
see your chat.
I have my chart on, but it's not on the dashboard. Don't know why that
Kindly
is.
put it up so that where I can see here. I can see your chat
Let me
here.
just share it again so that I hope this time around.
Kindly so that if you speak about a ticker, we can at least see. Because I'm trying to look for consolidation here on Tesla, even though I'm not willing to play around with Tesla until after the conference tomorrow.
Yeah,
So
it's quite strong today.
yeah, today it's
I
quite
think
strong.
the consolidation is on a very lower time frame, on the 5 minute time frame. So
Mm.
that's why I guess. Yeah. I think my screen is not coming to the dashboard. How do we work this out? I guess we learn on the job. Yeah,
Yeah, it's
tough
okay. We
learning.
learn on the job. It's tough learning. Okay, well, mention the ticker. I go to the ticker. We see what's happening.
Yeah, go to 5 minute Nvidia, maybe.
5 minutes Nvidia. There you go.
Yeah, you see the consolidation happening after we got to the day's highs, came back
Yeah.
to came back there. So we are finding some kind of support. So that to me shows some kind of strength because we were trying to get to VWAP but never got there really. So I guess there's some strength. We are still playing above VWAP for me.
Hey, hey,
And
are we above or below VWAP? I think we are above VWAP, right?
yeah, we are above VWAP. We are
Yeah,
creating some
definitely.
support above VWAP. You're creating some support above VWAP, and therefore this is a sign of a very
A good
strong
thing.
name today. Yeah, so I guess I think things will just coming down because of the trading time. But later on, if you get to view up and indeed touch it and reject it, this is one of the names that I'll be looking for taking long today on an intraday basis. This is given that the Nasdaq is quite strong today as expected. And yeah, more to come because we are just shy of 1.5 seems quite big for an intraday play on the Nasdaq. But remember that this day has a lot of data coming out, and I expect that this market will be quite emotional today. Again,
Yeah, sure.
some of the big names are quite strong today. Tesla is strong after being very heavy yesterday. Meta
Yeah.
again was fairly strong yesterday. Sorry, that is Microsoft was fairly strong yesterday. We are seeing some strength in it today. It's more than a percentage up. So with all these stocks,
Yeah.
except Meta, which is kind of lagging, I say that it's a weak name, and if the market wants to turn around, wants to
Actually,
undo,
it's
yeah,
it's the only Mag 7 which is not strong today. So, oh.
true, it's very weak. So if we are seeing a red market today, if the market wants to go red, which is quite
Okay.
impossible, yeah.
Before you go on, I think Clement is wants to drop, and I think it's good he gives a parting shot before he leaves. So Clement, just say your closing remarks before you go.
Oh, okay. So yeah, it's been a nice session. I'll be attending these ones, and yeah, we're now waiting for the FOMC to do their thing. After that, we'll have a space to discuss it. Yeah, pia hiyo nitakuwa. And thank you for
Okay.
having me.
Yes. Thank you too. Thank you too.
Much
Okay.
appreciated.
Just
Yeah, much appreciated, Clement. You have a good day. I think happy trading, and we'll see you over at the space this evening. For those guys who don't have, who are not in the know yet, I think we'll be sitting around with some gentlemen and ladies talking about our views on the for just before Powell stands on the podium and after, just offering what we have seen and our interpretation of the news that will have come out and how we have read all that happenings later on this evening. So kindly follow us on our handles at Ometheko, at Jesse Nweru. Get into the TTKE community, just hashtag TTKE on Twitter. You'll find the whole community there for us and to see how this so that we can get together and see how FOMC pans out today. So back, Walter.
okay. You were talking about a tick. I was saying Meta which is doing poorly. We can see a very strong Apple. We can see a relatively strong Amazon and Google because all of them are 0.33 up, and a fairly good, a fairly strong Microsoft. Microsoft is strong after breaking the all-time high, and I hope it will go higher because I have a trade on there, plus the Google trade also. So uh, what else? I think we've gone around 2 hours and 40 minutes without talking about Coinbase. Coinbase, this means Coinbase is 5% for heaven's sake today. It means we are experiencing a very strong crypto market right now. So if I go back to the crypto market, I think Bitcoin is up 3.71%, 3.72 actually right now. So it's looking up for crypto guys. I think it's coming back. I'm not into crypto a lot, and I know Bitcoiners don't like. If you talk about crypto, you talk about Bitcoin, but you'll excuse me. Uh, Sindio Jesse, they excuse us
Yeah, true.
tafadhali. Uh, because if we talk about Coinbase, we talk about the crypto market, and the crypto market is, yeah, that's the whole business of Coinbase. So I think the crypto yardstick is Bitcoin. So Bitcoin is 3.272%, and as you can see, that's very nice. We can go back to our stocks. Before I go back to stocks, how is gold performing? Gold is, I think, wow. We saw some boom and recessions hapo kidogo.
Yeah,
So
I was
we arrest
that level.
we
That
we,
level on
we
gold is what was. You remember
is
me
what?
talking about that level? I was waiting for that level on the retracement. I was
Uh-huh.
waiting for 23 on gold, or 23 22 area, and this is what you're seeing.
Okay.
You're seeing the bounce. Like I mentioned, that
Yeah.
was the previous. Local resistance, now turned support, and we can see that there's a bounce in gold at the same level. So I guess we might be holding it longer term. I was already long gold. I had a position. I just added
Okay.
on to the position with a similar a
Okay.
similar value. So again, I have now two running trades on gold, having added at 23, 22. And yeah, we are in the green right now. And yeah, we just see for this latest position, my stop loss is just below that resistance stand support. So any of any
That
price
zone,
lower, low, yes.
eh, that zone ndio mnaitaga fair value gap, the imbalance there, the one I've highlighted just there. If you can see it on my chart. Unaona
Yeah,
this one?
whatever they call it. Yes, that level. They call it FVG
Yeah,
or something.
hiyo
Yeah.
FVG, fair value gap. Niko sawa. I'm not that bad off. Eh? Niko
Big
sawa. I
names,
can
big
relate to the new nini strategies in town. Niko sawa. I'm
big names.
okay.
We're referring to the same thing, I guess. We
Yeah,
all
we are
just
the same thing. Mm.
yeah, yeah.
Because
So sorry.
the charts are the same. So interpretation can be, we can call them different names, but at the end of the day, as long as everybody's hey speaking about the
Yeah.
same thing, so good.
No, Walter,
Anyway, continue.
something
Yeah.
something else is happening. Something very crucial is happening. If you turn back to your
Where?
oil chart or your WTI chart, we were talking about this some moments ago, and I told you that we had oil inventories coming in today. Now, guess what?
Okay.
We
Ooh.
have more oil with the commercial entities as reported today. So I'm not to get the exact number, but I am guessing you're having more barrels of oil with the commercial entities, and this is why oil is tanking and tanking good. It was green on the day, just turned to a hammer candle, and it's selling. Again, I think we talked about it. If it comes back to my area, I was looking for sell positions or two areas, you remember, at the 80
Yeah.
level, and also at down here at is it 76.9 or 77 area or thereabouts.
Uh-huh.
So I was also looking for a sell there. So given that we have more oil with commercial entities, again, this is one of the filters I use to filter my oil trade. And since we are seeing more inventories with commercial entities, then this is a good indication that the price of oil might be tanking. And I'll also be looking for good entry positions on the same as I continue to watch the commodity. So again, that is one of the big things happening right now. We
Let
just
me
had
just comment. Let me just
okay.
comment and redraw the chart the way how I talked about. You remember
Okay.
me talking about the head and shoulder?
Yes.
If Jesse didn't draw it well,
Yes.
let me just draw it well, and I show you the symmetry. Uh, and like I said, it happens to there. It was bullish then. Expecting it maybe to test the 80s, but it's not. It's not at the 80s. It's below there. So yeah, you would like to see. Vile Jesse amesema, the supply imeonekana it's more and the demand stays the same, that means price will go down. Basic demand and supply. So supply is high, demand is the same, price will tank, and we can see price tanking after the numbers. So yeah, to you, Jesse.
Yeah, I think that's appropriate. Although you're waiting for the 80s for a sell entry, that is one of the positions you are looking at. But 80 is not a particular point, it is a region. So ours
Yeah.
getting to the current region also serves the same purpose, because I guess we got to 79.3, which is fairly in the region of 80s. So again, we all know this because it's not about the charts don't get to your specific point; they get to your region sometimes, and what that is indicative, yeah. And as you say, the head and shoulder is quietly and but surely forming. And if we are breaking the 77.5 region, moving on towards the 76 flat region, I guess this is a good would be a good opportunity for me to be scouting for to be really into oil for a short position, because this was my initial intention. I wanted to take it down to 72.89 around there, or the 73 area. So yeah, it will be interesting to see if you get there, and if indeed you get to 72 area, if as Zolt has pointed out, we can break and go lower on this energy name. But for the meantime, it's tanking, and this is because of the crude inventories just announced at 5:30. I think they came in lower. I'm scouting for the exact figures so that I'm not saying my own things.
Just okay.
Yeah, yeah. So
Continue.
gasoline. This is a report I'm reading. I'm just quoting directly. So gasoline production increased last week, averaging 10.1 million barrels per day. Yeah, these are the gasoline prices. U.S. crude imports averaged 8.3 million barrels per day last week, increased by 1.2 million barrels per day from the previous week. So this increase of U.S. crude oil from by 1.2 million barrels per day, I guess, informs growth in supply, but demand remains fairly the same. So therefore, we can expect lower energy prices on the same. So going back to that, what does this mean for me and in relation, in context of the current economic environment? No, cheaper gasoline prices or cheaper oil prices mean that the operating cost of some of the companies or the manufacturers that depend on oil, and also the sectors such as transport sector, which is also a part of the service sector, will see increased. What do you call it? We used to have a name for it. It's unreal. It is some kind of income, but it's not really a realized income. But it is a cost reduction on their part, and therefore these sectors might have a fair operating ground. So we can expect also related bounces in the manufacturing sector, also in the services sector, like I said, the transport sector, and therefore it will continue showing us that this, in context, contributes to a cooling economic activity where companies, are incentivized, to drive down prices and all that. So therefore, this again in context contributes to the growing debate on a cooling economy, and therefore it will be very interesting to see if indeed we get to the 72 level and break that level, because it will be momentous for the cost of energy in the U.S. economy, and therefore all the related sectors will also show positive results resulting from the same. Back to Walter.
Yeah, back to me. I'm a very technical person, definitely, and I want to show you how in classicals we use zones. And for the zones, we speculate on how structure can form so that two and on the higher time frame we've just seen we're expecting a reversal, and I've tried to extrapolate a reversal from my end, and from this end I can show you how I expect a reversal out on this. I know it's if we go lower, we expect just this zone, and this is the zone I'm talking about, the one you're waiting for, Jesse, the one you're waiting for break down so that you can go short oil. So I expect price to come here, at least act like a support. Try here up, back up here, then we see price tanking lower. So that's how we use how classicals use zones. And
Yes.
as from what Jesse has said, it can be decoded this way
Yes.
on the side of charts and price. So even the Siuka drawing kila mahali. This is nursery. Jesse, say something. Before Jesse says anything, I think we can see the stock market moving back up. And moving back up, what do I mean? I mean we have it and a support after closing in the gaps, the previous gaps which were formed during the open. And this gap, the Google gap was the Google gap up has been filled, and the price is going back up. For Microsoft is very strong. I don't think sellers have a chance, because for every sell there is a very strong buyer in there. So I think we can see up and up for 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 Microsoft. And on this other side, it was a huge sell-off for Netflix. And after filling the gap and going slightly lower, we can see price going back up. So same way I'm saying, what price has been doing for the tickers which moved very far, which had a huge gap up during the open, we can see a fill in price. So the fill is there, and hey, for fuller for longer, for upper for longer. So we can see Nvidia coming back up. We can also see it coming back up from the squeeze mentioned by my co-host here. And we can see a channel. And if we break out of this channel, I hope it has bounced off the view up you are expecting. Jesse, are we bouncing
Is
off
that
the view
Nvidia?
up?
Is that
Yes, this is
Nvidia?
Nvidia. Yeah, that's what I'm asking, because I don't know the view up to apply here. Has it bounced
Okay.
off the from your
Yes,
end? I think
it got to Vive up and
has it.
bounced. That is what I was waiting. Yes, it just bounced off Vive up.
Have you taken advantage of that?
Oh my God, I'm so busy looking at other things I forgot about Nvidia.
Exactly. That's why I told you you have to plan your watch list well, and you need to
Oh,
be you need to be very fast. I think in the stock market, something funny, you can easily miss out. You can easily miss out on a yes, on an opportunity. And the way you see me doing it, it's the way I expect you guys to be doing it from your. You
you
should
know
be
what?
very quick.
You know
What?
what? I should have gone long on Nvidia at the bounce of the waiver, but we are not far from it. We are a couple of
Yeah,
cents
you.
away from it. So
Yeah,
we are
so
30 cents. We are 30 cents away from the entry point.
from the
So at
bounce.
this, yeah. So what
Okay.
I'll do is just go in with a smaller value, because I'm expecting that we at least
Yeah,
get to test the day's high, which is at 126 or so. So again, that is a shilling. That is a dollar. Oh, sorry, not a shilling.
that's a dollar.
That is a
That's a dollar.
that's a
Yeah,
yeah.
that's a quick dollar.
So it makes a lot of sense to me. So let's go and
Yeah.
yeah, just take over as I put my
Uh,
logos in.
it's okay. So this happens. I know it's good to have been prepared before the market. And the thing about this market is something very nice I like about the stock market. From 11, the market is closed. You don't have to overthink about the market. It doesn't run for 24 hours. So you have time to prepare from 11 today to tomorrow the same time, same time as at 4:30 before at the open. So you have ample time to prepare yourself. But after preparing, definitely what you're doing when you're preparing your stock picking. So after the stock picking, what happens at the open? You have like 4 to 5 favorite tickers, and you should be very quick so that you cannot miss out on an opportunity for in one of the tickers. So you have to be quick interchanging and looking at everything else. So hiyo ndio kazi ya hii side. I used to gold peke yake, ama kama ni EU it's EU or GU. So that's how it goes. And I hope mtajoin. You'll join me to we be trading stocks, and I think don't I'm not really trying to say change the narrative, but at least we add on some skill into the game and at least do something better for the market. Not better, but we at least expound on what we're looking at in the yes, I hope that will be done. And I'll go back here to Google, and Google is still trying to go up. Softy doing the same. The Netflix doing the same. Actually, really good. I wish kidogo. I feel like I wish I didn't get out of that position, but no. Uh, if what if it went much lower? Yeah, that's another side to think about. So I want to see Qualcomm, but Qualcomm didn't give me. I was not filled on Qualcomm, so he's just looking at it fly, and it's consolidating on the 5 minutes. I think that's a huge consolidation, and we can just watch. If we get an entry towards the close, I think I can play, and an entry from a consolidation, not just an entry, because if it was just an entry, I could have just placed, I could have just bought at the open, but it was not at my level. So I'll just wait. That's how it goes. I think Meta is back up. I think not me, but my co-host here has been crying all day that Meta is the only nini Mag 7 which is doing bad, but fairly good. Imeanza kurudi juu, and coming back, I think we might. I don't know, but we might test the today's high, and better yet, after it closed down the yesterday's opportunity. I was expecting, yes, a consolidation, and hopefully we can see this consolidation coming in for a good setup tomorrow and a breakout. That's what I look for in the market. So the consolidation, sometimes it's a very good thing. Not sometimes, actually, a consolidation means an opportunity. So yeah, that's what we're looking at. Apple is flying and flying and flying and flying and flying, and I think we might be graced with 220s tomorrow or later in the day. So Amazon the same. I think we're coming to the end of our today's stream, because we're supposed to be closing down in like 4 minutes. Today we started earlier because of the pre CPI. But normally we do start our stream at 3:30, and we've gone I think 3 hours right now, and we've not talked about the competition. There's an ongoing competition which will be very interesting, which is already very interesting. And the goal of the competition is to interact on a skill level, and that's why we're doing all this around the competition and everything. Uh, we have the group. We have the small community about the competition called TTKE, the top traders, because we want to bring those top traders from the competition of wisdom here. We will invite more. We have two who are lined up to come talk to you guys, and I think it will bigger and better. We want to change the narrative of these forex guys are not real traders, and we want to bring you the guys who are performing, and that's our main thing. And we want to be as possible for you guys. So this is what is happening. Kindly join. Go join if you've not joined. If you've joined, keep it up. Tell us about your progress. Come to the events, so that because we will be having physical events where we interact and share ideas, like you saw on the previous event last week. Actually last week. So I'm psyched, and this is very good, interacting on this level. Closing remarks. I think it's been a good day. It's been a peaceful day. It's already being peaceful. It's continuing back up. I know we've suffered. We earlier on I suffered a Netflix loss, but I'm still holding on Softy and Google, but we're still going. We're still going. And Jesse, do you have any closing remarks today?
Oh yeah, I think we are about to close. So thank you everyone who joined us in this stream, and I hope you get to join us each and every day as we go over the markets, see how we take our positions, see us take positions. I was about to show guys my Nvidia position that I just took, but I realized something when I went to the account that I'm trading for the contest, is that the spreads were not on my side today. So yeah, so whatever the price I was targeting will not give me the result I wanted. So maybe I should have been earlier going for the viewer bounce on Nvidia, but all the same. About the competition, allow me to say a very big hi to everyone that is participating. We have our topmost guy who's Johnston Andati. He's holding on to very good percentages and a very special, and this is for no reason at all, with no intended purpose. Hello, Ashley Mutiria, who is closing down the leaderboard.
You
At
had to
number
have that disclaimer. That disclaimer was a good one. Anyway, continue.
Yeah, so nice to see some ladies picking up on the competition. I think we had Magdalene, whoever you are, wherever you are. I hope you're watching this. Thank you for participating last month and giving us, such a thrilling time. And welcome Ashley to the leaderboard. And I hope you climb higher than your current percentage and your current position. Yeah. Feel free to continue trading. The other guys, Davis Adera, Samuel Ndongo, Kevin Gichwa, Kevin Kinyanjui, all those guys. Thank you for participating in the competition, and I wish you all the best. I wish you guys a winning streak so that you can bag the prize, which is $500 at the end of the month. So thank you, everyone. See you guys tomorrow, right? Same place, same time. It's bye-bye for me as we wait for FOMC. And again, we're also having a space at the same time. So kindly join us then as we dive deeper into what will be happening then. Thank you, guys, and bye-bye.
Thank you.